Okay, so we should be better. StreamYard just completely crashed on me. Let me know if it's better. I think it should be good. If it is, then we should be good to go. If not, then we're gonna have to try something again. But I think we should be okay. Let me know. Let me know. Let me know. Audio should be okay. Yeah, that thing just completely crashed, bro. Yeah, Mike. It wasn't even the mic. It wasn't even the mic. I went to go open another website and then boom, it just crashed. So we should be better. Should be good now. GDP data. That is what we were talking about. Comes in at 4.3%, way better than expected. 3.3% was the number that the street was expecting. Obviously, 4.3 is better than 3.3. However, you're also getting PCE that was potentially as good as what the street wanted in terms of the inflation prognosis, which is why the market's a little bit upset in the pre-markets. I think there might be a couple other reasons, but here is all the data. Let's take a look at all of it right here, and then we'll keep going from there.
HQ with some delayed but very important data points. We'll be looking at October preliminary durable goods, Philly Fed, and GDP. Second time around the block delayed. Third quarter numbers. We're looking for 3.3. Zoom, zoom, zoom. 4.3%. 4.3%. That is a nice jump. And I know many may question day the gathering, but on the surface, this would be the strongest quarter going back to the third quarter of 2023 when it was 4.7. This is strong. 3.5 on consumption blows away the 2.7 we were expecting. That would be the best since the last quarter of 24. On the price index, here's some not good news. 3.8% on the price index. That's much higher than 2.7 we were looking for, much higher than 2.1 in the rearview mirror. That would equal the first quarter of 23 to find a higher price structure. You'd have to go to the last quarter of 2022 when we're at 3.9%. Now, if you look at core, a different story. The price index was warm. Core, well, as expected, but still warm. 2.9 is what we were looking for, quarter over quarter. Personal consumption expenditure price index. Now, issue is 2.6 was our last look, so it's up 0.3. 2.9, well, 2.9 would be the warmest since we're at 3.3 in just the first quarter of this year. Now, let's go to Philly Fed non-manufacturing, comes in at minus 16.8. That is actually very close to expectations. That would be.
So the key parts of the data right there are that we got higher GDP growth at 4.3% versus 3.3% expected. It's the highest in 2 years, and mainly from consumer spending, exports, and government spending is where you're getting the growth. PCE actually comes in at the lowest level in what was it? I think he said since July of this year, we were at 3.2%. We came in at 2.9. So you've got a relatively strong GDP. Again, 4.3. If we can grow at 4% for multiple years, this economy is going to be one of the best we've ever seen. Obviously, the risk of that is keeping the labor market strong while also making inflation doesn't get out of hand. But we also had PCE, which is kind of consistent with CPI, coming in just better than expectations. And the street kind of thought it was going to be a bit higher than it is. So, and by the way, I'm home. That's why you have this background right now. Why is the market down in the pre-markets, I guess, is the broader question for everybody. S&P 500 right there goes negative 0.15%. We did have a green day yesterday, although it didn't feel like necessarily a green day because sort of the biggest movers weren't really participating. But we did have a green day, and now we are going red. Quite frankly, you see Robinhood here down 1.7%. Bitcoin hit 86 last night, so Bitcoin also feeling some pain. Bitcoin right there, 87.628. I kind of think, there's your argument right there. Less chance of rate cuts. Okay, so the rate cut probabilities went below 20 this morning, given the GDP growth is so strong. Obviously, if GDP growth is strong, one could argue that inflation could tick up because more people are spending. The counteract, now it's at 15.5%. So, you're getting less of a chance of rate cuts, which are obviously really good for equities. The counteraction to that argument there is that, well, we're going to have so much unemployment from AI that could be kind of one of the reasons why inflation could come down. That could be deflationary, but that's not what we're seeing in the data yet. We're seeing labor market weakness, but we're not seeing such extreme labor market weakness to the point where the Fed needs to cut immediately, although there's obviously an argument for why the Fed should be cutting. So I think you're going to see a continuation of some of the downside trend that we saw last week, potentially when the market opens, if this data is interpreted as less likely for a rate cut, or it's a head fake and you immediately see a reversal going into the market open. NVIDIA right there down by 1%. There is an NVIDIA headline this morning that's also causing that. Oracle's down 1.3, Broadcom's down, Palantir's down, Micron's down. Now, a lot of them are just giving back the gains that they had last night. Most of these stocks were up 1 to 2%. Broadcom right here was at 341. It's at 339. It was basically chilling around 337 all of yesterday before it pumped at the end of the day. So, I mean, it would not surprise me if we get a little V-shaped recovery right here, and this data is not as bad as what the street was thinking, and therefore they get excited to buy stocks. But also it means we might not get a rate cut. And sort of that good news is bad news argument, which is not a bearish thesis. It's just like in the short term, that could be obviously a little bit not the best for stocks. So we're going to see what ends up happening, but that was the major data of the day. And the fact that we got that data, I think, was really important. Again, Q3 GDP came in at 4.3% versus 3.3% expected. And you're getting some of that momentum. There's a lot of other headlines to get into, which we will start with. I'll put the red or green poll in the chat right here. The other big question that I think a lot of people are struggling with is, once again, is the market exhausted of the AI trade? And is there the potential for that Santa Claus rally going into the end of the year if the market's exhausted? Now, again, we are not necessarily at the Santa Claus rally time. That is going to take about 3 days until we get there. Right now, we're on December 23rd. It usually starts December 26th. So, I mean, you might have a little bit of choppiness before we get there. But even yesterday, you had a lot of stocks that hit all-time highs, one of those being Rocket Lab, which got a 77 handle yesterday. It's down 5% of the pre-markets. A couple insiders sold some shares. I don't think it should be selling off of some insiders selling shares, but nonetheless, obviously it's priced to perfection, and any bad news will take it down. But it got a $90 price target this morning. And yesterday, most of the stuff that I saw over X was people getting ready to trim their positions or hedge their positions because they didn't feel that the all-time high was justified. So you're having a lot of these stocks that are getting momentum, but then you also have a lot of people saying, well, do they deserve that momentum? Which is not necessarily what you see at, a raging bull market. You're seeing a lot more caution here than excitement. And I think that's also making people wonder, will that Santa Claus rally happen? Along with crypto that simply is not participating. And every time it tries to make a run, yesterday we were above 3150 on Ethereum. We were at 91,000 on Bitcoin. And those things got hit late last night. I think it was around 11:30. I got the notifications that Bitcoin was down, which is affecting all the crypto derivatives like Robinhood, Coinbase, MicroStrategy, et cetera. S&P 500 right there down about 0.18. And then SoFi is down right there. Now, in addition to that, the other reason you got people kind of concerned about if this Santa Claus rally can happen is that gold and silver keep going up, which is not necessarily a hindrance for a Santa Claus rally, but yeah, it makes you wonder if money continues to leave the equity markets and the bond market, quite frankly. Silver at $70. That is an all-time high, folks. The 10-year, by the way, has not really had any progress either, as that one, that's up in the morning, 4.186%. So you got people selling off bonds, potentially just buying gold. And then you had gold that did hit an all-time high this morning as well, 44.74. That's up another 1%. I mean, I don't know what to say about this. I'm definitely not buying silver at these levels. It feels overextended. But then again, if we're in a commodity super cycle, then maybe this thing has a lot higher to go. I just personally don't feel comfortable buying it here. But people do. And they are continuing to allocate. So silver and gold pretty much have done what everyone thought Bitcoin would do this year. And as a result, you might be seeing a little bit of rotation off that as well. Silver now up 70% year to date, or 63% year to date. Gold as well, up about 58%. So pretty incredible price action we're seeing from those levels, but the risk on assets are not necessarily benefiting from that same type of exposure. S&P 500 right here down 0.17%. Tesla did get to 498 yesterday. Tesla's now at 486, and that's down as well. Doug says, do we think people are hedging after D-Wave had a 20% day yesterday? Well, yeah, I mean, D-Wave had a great day yesterday. A lot of the quantum names, D-Wave right here down about 4%. One could argue that yesterday was a super, super high beta name or high beta risk on day for a lot of stuff, not just D-Wave, Oklo, a lot of your space names, et cetera. I mean, you had an IPO that was up 300% because it's in the space arena. This company IPO'd on Thursday. It was up 370%. Yesterday, it's up 30 or down 30% in the pre-market. So maybe there's a natural just like decline the day after you have this massive, massive high beta day. But we're going to see, dude, it could easily feel like a head fake because that data we got this morning was really freaking good. And although it lowers the chance for a rate cut, which is bad for equities, it also shows the economy's on fire, which is a good thing for equities. And so I think at 9:30 when we get volume that comes in, which already is going to be reduced given we're 1 day away from Christmas Eve, we're going to have to see how the market ultimately interprets the data we got this morning. But nonetheless, we are red right here. in the pre-market, 684, 683.65 on the S&P 500. Okay, so let's get into some of the other headlines that we got going on. Again, sorry for the first stream. I don't know why StreamYard crashed, but it did. Also, this is my other laptop. It's not even my really good laptop. So for the rest of the week, I'm going to be using that laptop instead. I thought this laptop would be fine, but obviously it's a little weaker than my other laptop. All right, so Rocket Lab, let's talk about that real quick. They did get a big upgrade this morning. $90 is the upgrade from Needham. And Needham is bullish. They're upgrading them from 63 to 90. So you're getting the institutional analysts that are starting to participate in the ecosystem. On Friday, the SDA announced contracts for its coveted tracking layer Tranche 3, which Rocket Lab was awarded $805 million. We believe that this award, the largest in company history, strongly validates Rocket Lab as a defense prime, its burgeoning space system segment, and more than doubles segment backlog from $600 million to $1.4 billion in revenue. And as a result, you're seeing some more excitement on Rocket Lab. I think the price target is less relevant. What's more relevant is the momentum around the space trade and if that can continue. I mean, obviously, Rocket Lab will be probably a much larger company than it is 5 years from now if they continue to execute. The question is short term, does this thing get the run up to 90 and then a decline from 90 would be back to 70, or does it actually decline from 70 and go to 50, in which 90 becomes more of a 1 year target? And we're going to have to see. But the excitement on the space trade, I don't think has died down, even if some of the space stocks are down. Again, Rocket Lab down because of some insider selling yesterday, which is relatively insignificant, but it is the leader of this trade. So then ASTS right here is down 7% as well in the pre-markets based on this. I don't really know if the space trade holds momentum going into the new year, especially if we get any macro headwinds, because again, it's a high beta trade. But if SpaceX IPO is pretty quick, I think that trade comes back. So I think that's the thing to watch out for. Obviously, if you bought Rocket Lab years ago, you probably don't have to worry. But if you're thinking of playing it today, the question is just getting the timing right to make that make sense. Yeah, Lunar has been on a tear. Intuitive Machines, this one's down 8% of the pre-market. It was up 7% yesterday. Black Sky was up 17% yesterday. This one in the pre-market is down 2%. So just a lot of these names giving back a little bit of the gains that they had, but the goal is for them to keep majority of those gains as the space trade continues to get excitement. NVIDIA right there, that's down 0.73%. Robinhood down 1.73. Robinhood Robinhood was chilling below 120 all of last week. So if we get a little bit more of a crypto decline, maybe we see that. But Robinhood right there right now at 120, then Palantir down about 1% in the pre-market. Okay, so that was the headline on Mr. Rocket Lab. Again, Q3 GDP came in better than expectations, and now it's just a question of if that can continue to maintain excitement. In terms of NVIDIA, so the problem with NVIDIA right here is that, again, the China smuggling report continues to come up. So Bloomberg is reporting the U.S. is probing Singapore-based Megaspeed, NVIDIA's biggest chip buyer in Southeast Asia, over suspected smuggling over NVIDIA chips to China, and is questioning its ownership structure after inventory didn't match its data center footprint. So you had a lot of analysis after NVIDIA earnings that there is massive inventory backlog. And that inventory backlog, as that continues to increase, that's necessarily not the best thing for NVIDIA because it proves that they're not actually selling their chips. Now you have a company called Megaspeed in Singapore that has been a buyer of a lot of these chips, has been stacking them in their data centers. And based on the analysis by Bloomberg, the 10-year, by the way, 4.192, that one now potentially getting up to 4.2%, is making the argument that the inventories that they say they have versus the amount of chips they should be giving across Southeast Asia, aka they're sort of a conglomerate that's buying them and then distributing them, but they have way more chips than they should have in their data centers or in their supply versus their data centers, is signaling that they're giving some of those chips to actors that shouldn't be getting those chips, aka China. And while that is probably happening, if we're being honest, I also don't think it matters that much because the H200s have already been approved to be sold to China. That happened yesterday. And same thing for AMD. Trump, by the way, made an announcement this morning, or at least the White House made an announcement, and they said that we will have no tariffs on semiconductors for China until June of 2027. So you have 2 years. Yeah, U.S. announces that tariffs on Chinese semiconductors remain at zero until June of 2027. So, the semiconductor trade as it heads into China should be a relatively decent trade. But nonetheless, you're still going to have arguments around smuggling in case that ends up taking place. U.S. Trade Representative has determined that China's acts, policies, and practices are actionable and that appropriate responsive action includes taking tariff action now on semiconductors from China with an initial tariff level of 0% increasing in 18 months on June of 2027. So bullish semiconductor names, but nonetheless, still you're going to see investigations that take place. I just don't think those investigations matter because I mean the largest the investigations can go to are the DOJ, and I think the DOJ is not going to care that much about this at the end of the day. So that is one argument that we saw this morning for NVIDIA and AMD, but overall, these likely should stay intact. So that's what we had on the NVIDIA headlines. Now, Trump made a bunch of announcements yesterday. One of those announcements is on new battleships, and this is what he said yesterday about those battleships that will be created, along with the change in incentive for the executives at these defense contractors that are making these battleships.
We'll be discussing the pay to executives where they're making $45 and $50 million a year and not being able to build quickly. They're going to make that kind of money. They have to build quickly. Again, we make the best equipment in the world, but they don't make them fast enough. And we're going to be also discussing dividends. We want the dividends to go into the creation of production facilities. So we'll be talking about all CapEx, dividends, and the pay. We're also going to be talking about buybacks. They spend so much money on buyback. They want to buy back their stock. I don't want them to buy back their stock. I want them to put the money in plant and equipment. We'll be discussing the...
So, I mean, it's a actually rather bullish announcement from Trump on this case, which is the idea of compensation for executives being better than it being more better than expected on a historical basis. So it should be more aligned with the stakeholders, not necessarily the shareholders. And when they're being subsidized by the government, which a lot of these defense contractors are being subsidized, then that makes sense. And this is what, Shyam Sankar, the Anduril founder, they've talked about a lot around how the taxpayer dollar should not be subsidizing the basis for a lot of these contractors to make their money. So I thought that was actually pretty bullish that Trump said that yesterday, but it continues to show the investment we're making in the U.S. military. We have now approved a $1 trillion defense budget for the military going into 2026, which is a massive budget. It is equivalent to the amount of interest that we're paying on the debt. We take in about $6 trillion in revenue. We're spending $1 trillion of debt or on interest on the debt, then $1 trillion on defense. And so that's why the GDP number was also really important, because we need to outgrow the amount we're spending. And if we don't outgrow the amount we're spending, we're obviously going to be in a pretty bad situation. So GDP coming in at 4.3%, if we're going to keep spending the way we're spending, is likely something that needs to happen. Novo, that's up 9% in the pre-markets. Why is Novo up 9%? They have officially been approved for essentially Ozempic oral pills, GLP-1 oral pills. They were one of the first companies, I think they are the first company that has been approved. Eli Lilly got approved for this a while ago, but the Wegovy specific one has been approved. So that happened late last night, and the FDA officially approved this pill, which for those that want to lose weight this way, I mean, taking the pills, relatively easy to do this versus someone says stop eating. Yes, you could also stop eating, but if this is a way that you want to go, then you can do this as well. So, I mean, look, at the end of the day, this is bullish Novo. Novo's been in an ugly downtrend all year. They've had a lot of different controversies. Obviously, their beef with Hims has been well documented as a compounder that they've sued. Hims right here, still at 34 in the pre-market. Novo down 45% year to date. So they kind of needed this type of jolt of good news to get this stock back into action. But as of now, it is pretty much pumping on the idea that Wegovy has officially been approved. So for anyone who's in Novo, I know Chris is in this in the stock draft. If you are in this one, then this is the news you want to see. I think personally, there's a couple of other more foundational problems with this company that need to be fixed before it re-rates in a meaningful way. It is on a bunch of lists as like a top pick for next year. Question is going to be, is this enough to like really sustain a lot of excitement and momentum? But that's what you're seeing in the pre-market for Novo. Pre-market, it is currently up 9.46%. D-Wave down about 5%. ASTS down about 6%. Black Sky down about 4%. Bitcoin at 87. Robinhood down 1.5%. Amcor down 1.2%. Where is Broadcom? Broadcom right there down about 0.61%. And then Oracle, which had a nice rebound from 179. I mean, if you bought it at 179, you got it at 198 yesterday. That's stuck now at 196. Down in the pre-market. Fets, thank you for the $20 super chat. Merry Christmas, Smith. Hope you and your family have a great one. Same to you. Thank you for the super chat, and thank you for being here. Hope everyone enjoys the holidays as we are getting into the holidays pretty much tomorrow. I mean, most people are probably starting today. Dude, I was asking Steve this yesterday. For those that are at work or for those that are going to work today, is anyone actually working? Like, I don't think a lot of people are actually working today. I was asking Steve yesterday. He was at the office. I was like, bro, are you actually working? He was like, well, I'm at the office. I'm like, yeah, but you're actually doing anything? Because this is the part of the year where I think everyone just completely shuts off and people stop working. Even if you're at home, which you guys at home don't work anyway. So now, look, if you're on an oil rig like Scott, you're working. So that's fair. But if you're at some desk, I doubt you're putting in the hardest work on December 23rd. We talked about the tariff news on China semiconductors. It'll be 0. This is bullish. If we have a good relationship with China, then they should be 0. And obviously, this should be good for AMD and NVIDIA, which are going to be the main companies that put out semiconductors to China, are the only companies that have been approved to sell those semiconductors into China. Yeah, most people are saying they're not working. I mean, for those that are working, it's good to work. I'm just saying, like, most people do not. I even remember back when I was in college and high school as well. Like, no one studied on, kids didn't actually learn anything on December 23rd. Teachers did not teach, which is fair. I mean, it's the last day before the vacation break, so it's understandable. But I feel like it's the same when you're an adult as well. Rocket Lab right there, down about 5.3%. Bitcoin right there, 87.7%. And then NVIDIA, that's down 0.73% on the day. Okay, so let's get into a couple of the other headlines we have. First of all, we got Navarro. He hasn't been on TV for a minute, so I guess they're trying to get him to further explain the tariffs. Let's listen to what he has to say, and then we'll get into the other few headlines that we have in the pre-market.
China joined the WTO, the supply chains follow. And so President Trump wants those supply chains back as well as the factories, but it just simply takes time. And in some sense, I want to thank the Chinese for weaponizing their supply chains, because it's made my job a whole lot easier. It's made President Trump's sales pitch a lot easier to invest here in America, because it really highlights the national security aspects of it. So we just got to be patient. Construction jobs will be first as the investment comes, and then the manufacturing jobs, Joe.
You say a lot in that piece and clear up a lot of things, or at least attempt to. One of the things that we talk about a lot and that people argue about constantly, Peter, is who's paying the tariff. The president always says we're collecting money from foreign countries. Other people, even conservatives, say it's tax on U.S. businesses. You say it's not as simple as just an accounting entry, but it's about bargaining power, not paperwork. So that the countries that are affected, the exporters, they actually do end up indirectly paying, not really paying the tariffs, but it's affected in terms of cash flow between the two countries.
That's exactly right. And if you think about it, it's an exercise in what we call in the trade tax incidence analysis. So if taxes, the normal thing where you got taxes, it's a battle between consumers and producers, and it depends on things like elasticities and supply and demand. But with tariffs, they're not a tax because they introduce a third party into it, which is the foreign countries and the foreign producers. And if you think about it, the top 20 countries that we have these massive trade deficits with, they depend on our economy. They depend, for their prosperity, they depend on our economy. So history showed us clearly, Joe, in the first term when we put the 301 tariffs on China, China ate the tariffs. They ate the tariffs. And so people like get on Squawk and they're puzzled. Why? Well, we haven't seen the tariff inflation yet. Why? Well, it's simple. It's Occam's razor. The obvious solution here is that these countries have to sell into our market. It's a privilege to do so. And we charge them the tariff as their gateway. And
so the White House continuing to make the same argument, which is what Navarro has said for a long time, which is that ultimately the tariffs are not going to be inflationary. Now, again, Jay Powell also kind of agreed with this back at the FOMC meeting. Based on the PCE data we got today, we're not seeing a massive impact from tariffs. We are seeing somewhat of an impact, but it's the lowest level in the past couple of months, which is a good thing. Bitcoin right there at 87.5. If that continues to be the trend, then obviously this will be good for the broader economy if tariffs aren't creating that much of an inflationary issue and somehow companies are eating most of the tariffs, which again, a little hard to believe, but nonetheless, we haven't necessarily seen that in the data, even if prices are increasing a little bit. The broader question here is about the Supreme Court. So the Supreme Court was supposed to issue their decision at the end of November. The oral arguments are over. They've heard both sides, and now they're likely deciding who to vote for. whether it's going to be the government, Trump, or it's going to be the people that are suing the government. And we will get a decision probably in early January on what happens, right? Like if we reverse the tariffs or not. Trump administration has already come out and said we have a plan for the reversing of the tariffs, so we're going to be okay. But if that does happen, I really do wonder, do companies like Nike, Elf, et cetera, immediately get that boost just off the perception, even though Nike had a really crappy earnings, that they are going to not have to pay the tariffs. And again, Nike blamed a lot of their problems on tariffs in Thailand and Vietnam. Nike right there down another about 30 cents in the pre-market, 57.22. That was down 3% yesterday. AMD, that's down about 1%. Nvidia down almost 1% as well. So that is one trade to watch out for in terms of the Supreme Court reversal, but that's another thing that could create a lot more volatility going into January, which is something that all of us have to pay attention to if we are going to continue to be in some of the more volatile names. Speaking of volatility, I mean, take a look at this chart. I thought this was pretty incredible to look at. So the volatility index, because 2025, I think all of us can agree, was pretty volatile, to say the least. I mean, we had a 30% drawdown in April. We came back in the next 6 months, and then we had the October 10th liquidation of crypto, which caused another 10% decline. The VIX was averaging 19.1 this year per month, which is slightly below its historical norm, which I think if I asked anyone who's in the markets at the end of 2025, hey, do you think this year was more volatile on average? Everyone would say, yeah, it was a pretty volatile year. But the months of recovery post-liberation, they actually average. I mean, the VIX right now is, I think it's spiking up a little bit, but it was like 14, 15 yesterday. 19.1 is lower than the historical average of 19.5, which is quite incredible. And we did have a VIX at above 30. At one point, we had it above 60, I think in the pre-markets of that April 10th, April 12th day where everything kind of collapsed. S&P hit 4,800. So although the volatility has been aggressive, the recovery has also been aggressive, which I think goes to the reason for why we've had a couple choppy months in the market. April sucked, and then everything until October 10th essentially was just like rainbows and happiness. And then October 10th, we had the decline, and since then, it's never been the same. So I think part of the reason we've been struggling over the past couple of months is simply because we had such a good run, 6 months of 0% movement on the S&P up, or not 0%, but rather no 1% up or down days. The S&P was moving every month, but it was never moving in a volatile way up or down in an intraday move, which ended up leading to just like a little bit of action every single day that added up to green at the end of the month for 6 months in a row. And then you had the volatility that we had to experience, along with this whole crypto liquidation stuff, if there's any truth to that thesis of over leverage. So that is why we might not get the Santa rally. Although, again, we got a couple days before that Santa rally plays out. A lot of times the Santa rally is a rebound from a crappy September, October. We had a really decent September, October. We even had a good November, even though it was volatile. We still ended green for the month. And so we're going to have to see if the year can end in a more exciting way as well. 27.30 on SoFi in the pre-markets. Let me see what people said in the chat. 52% of people saying green, 48 saying red. So that's basically 50-50 on the day. Yesterday was 80-20. So you are seeing sentiment potentially shift a little bit. Again, I do think this pre-market move could be a bit of a head fake. We have the market open in 9 minutes, just given how good GDP data was. But I also think, again, that same exhaustion theme is real. I don't think people are necessarily the most excited to buy a ton of these breakouts. TLT has not been a good trade this year, unfortunately. The 10-year, which again, look, this is an issue. It's as much as we want to ignore it, it continues to be the thing that pokes its ugly head out every time we try to move forward. We are lowering rates, but yields are not going down. We talked about this yesterday with Japan hitting 2% on their 10-year for the first time in 40 years. And then our US 10-year, unfortunately, is not going down. People should be buying bonds because they want to lock in their rate and because they are so confident that rates might potentially go higher or inflation might potentially be an issue, even though the CPI PC is showing it's not an issue. You're seeing a sell-off of bonds, which is not necessarily the best thing in the world. So this could also be another reason we're potentially stopping a little bit of momentum into that Santa Claus rally. For those asking where I am home for the next 5 days. I am going to stream on my better laptop for market close. I believe we'll have Jason today for Technical Tuesday. I thought this laptop was fine, but because I was already on it, so I was like, you know what, I should be able to use it. But yeah, I'll use my better one for the market close, and we shouldn't have any technical difficulties. But this one should be okay right now. Ethereum right there, 29.40, and then Bitcoin 87,665. Again, silver continues to be one of the hottest trades of the year. Copper as well is not stopping. CopX, I think we talked about this a while ago. My uncle bought a decent chunk of options on this thing, $60 April calls. I bought a couple of them. I sold it a while ago. He's held on, and these have done very well. I think he bought them when this thing was like 55. It's now 73. These are copper miner calls. CopX is the ticker. And the more I hear about copper, now I'm hearing more people say, well, no, copper is the follow-up trade from silver, which is fine. But if silver starts stalling out, I feel like copper stalls out pretty damn quick. So you got to keep the party going if people are going to play derivative commodity trades off of the big two that ended up winning the year, gold and silver. And if these things show any cracks, I feel like a lot of the other commodities take a hit. But then the question becomes, why would these things take a crack if central banks are easing more and governments are continuing to print more money? And deficits are continuing to rise and debt spending is going up. Like there's all the arguments that are actually pretty bullish for Bitcoin, to be honest, that also tend to lean pretty bullish for commodities. And it's almost just like people have chosen real gold and real silver over digital gold. And I mean, just the price action of this year kind of shows that. So unless this money rotates into Bitcoin, which I feel like the likelihood of Bitcoin money rotating into gold and silver is more likely, which we've already seen that happen over the past couple of weeks, really past couple of months now. Maybe that trade continues to hold on. I just don't have the stomach to buy silver at 70, dude. A, because I don't understand that much about silver, and B, like the trade is the easy money I think has been made. And silver is at all-time highs. To buy here, you have to believe there's upside from all-time highs, which there probably is long-term. But in the short term, I feel like there's like equities that are rather undervalued, like Meta. Now, Meta has different risks than silver, but like I just would feel more comfortable having my money there versus in something like silver. Gold and silver is carrying my pension. Yeah, I mean, it has been a life-changing year for a lot of people. Palladium as well. Lots of these commodities have made a massive, massive move. And they've been able to make a lot of excitement. A lot of exciting. Platinum as well. I mean, either precious metals are in a bubble or precious metals are having their moment, and that moment's not stopping anytime soon. And I, quite frankly, just don't know the answers to that. But we're going to have to see. UBS, they continue to say, sell Tesla. UBS right here says 247 target. We're assuming 415,000 units. The estimate is 5% below the visible alpha consensus of 435,000. UBS notes that Tesla stock typically reacts to headline delivery beats or misses. Even if results meet investor expectations, Tesla is expected to report deliveries on January 2nd. A 240 target, again, is it possible? Yeah. Is it likely? In my opinion, not really, simply based off the idea that the momentum is strong for Tesla. And yes, the multiple is strong, but if they can continue to execute on expanding robotaxis, I think that's the only thing the street cares about. So I wouldn't expect it to get that low to 247. Could it fall from like 490? Obviously, that's very, very possible. But 247 would be, I mean, look, I think a lot of people would start buying if it even gets anywhere near the 350s. So we're going to have to see how that ends up playing out going into the end of the year. Bank of America, they continue to be relatively bearish/bullish. So they're bullish in the respect that they don't think anything bad is going to happen next year, but they're bearish in the respect that they think you're going to have modest upside for the S&P 500. They have a $7,100 target. They say we're not in a dot-com bubble. They also do think we are in a credit cycle that is going to inevitably be not the best thing in the world, aka you're going to see some pockets of private credit start to show a little bit more pain. But as of now, they think that, CapEx will be strong next year, which can continue to create investment growth in the S&P 500. They do assume 14% earnings growth, which is $310 a share on the S&P. However, they're assuming multiple contraction, and that's the difference between their target and the rest of the Wall Street targets. The other targets just have a better multiple on the S&P 500. By the way, the average target now on the S&P 500 is 7650 across the board, which if you take a look at this right here, it's actually the most aligned since 2017 in terms of projections, but it's also the smallest since 2017. So the consensus view on the S&P 500 is that you're going to get a gain, but your gain is not going to be something that you should be super, super excited about. Which, look, if we have a relatively year next year, it's not crazy given we have 3 years of a raging bull market. But I also think this is your contrarian potential long signal that everyone's saying, well, it's going to be kind of and maybe that's where it's way better than the sort of mediocre results the street's expecting. It's just, you can't deny that multiples are high right now. And for those multiples to expand, we need phenomenal earnings growth. We need really good Fed policy. We need really good earnings growth. We need really good consumer sentiment, aka the no tax on tips, the tax refunds. Basant talked about this yesterday. We need a lot of that stuff to be in the system, and a lot of M&A, IPO for this to play out. And if it doesn't play out, then we're going to have some issues. ServiceNow down 9% in the pre-markets. They're buying Armis for about $7.7 billion in cash. I think we talked about this last week. They're officially making the announcement that they are buying, I believe this is a cybersecurity company, if I'm not wrong, or something to do with cybersecurity. But that one, they're paying about $8 billion in cash. And that's why their stock is taking a little bit of a breather. All right, folks, we got 1 minute. Here we go. Thank you, everybody, for being here. We are going to see if this market can hold on to its momentum. Red right here in the pre-markets. Hopefully that can flip green. And if it doesn't flip green, we're probably in for a little bit of a choppy day. And if we are red, hopefully it's not an ugly red. GDP data was good. 4.3 versus 3.3 expected. PCE 2.9 versus 3.1 expected. So again, you had growth up, inflation down. Now it's just a question of if the market also thinks that is good. By the way, I do not have my bell as well. I will have it for the afternoon. So we're going back. We're going back to the basics, and we're pulling this bad boy up. Ladies and gentlemen, it is Tuesday, December 23rd, 9:30 a.m. The stock market is now open. So embarrassing every time I forget the bell and have to do it, but the bell must happen. Here we go. Wake your asses up. Let's get into it. SoFi is down about 1%, 27.12 as we open into this market. Tesla goes green. Okay, Tesla 491.45. That's green. That's up 0.5% on the day. Open door, that's down 1.4%. S&P 500 actually recovers all of its pre-market lows. Look at that. S&P goes green. Maybe that was a head fake in the pre-market against the data. Let's see if we can hold on to it. Snapchat down 1.5%. United's down 0.5%. ARK is down 1%. Meta's flat. AMD's down 0.5%. Netflix, which again is in this bidding war with Paramount in order to get Warner Brothers, that one is basically flat. Roku's down a little bit. DraftKings down 2.24%. Nike is flat. The Nasdaq's up a little bit. Google as well. They acquired a company called Intersect yesterday. Intersect is a data center play that's worth $4.5 billion for the acquisition. Actually, very bullish for Nebius, Iran, and CoreWeave. Nebius, that one is down 1%. It was green yesterday. Iran right there, 41. That's also down 2%. And then CoreWeave continues in its path. It was pretty green yesterday. It's down 2%, but up 20% for the past 2 weeks, which is not too bad. Oracle, that's down 0.5%. Novo's up 9.3% on that GLP drug being approved. NVIDIA goes green. Wow, NVIDIA actually making a better high from yesterday. Look at that, 184.30, complete reversal on NVIDIA. Rocket Lab, complete reversal as well. This thing was 70. I mean, it's still down 1%, but it was at 72. Now this is at 76, which is actually really nice to see on Rocket Lab, getting that excitement right there. So 76.14 on the Lab of Rockets as that's moving higher. Iran is down 1%. Meta is almost flat on the day, potentially going green. Broadcom right there at 342. ASTS was down 7% now. That's down 3%. D-Wave is down 4%. Hood almost went below 120, now still above 120. Amcor is flat. EOSE, that's down about 2.25%. And then Bitcoin, I mean, not really making a move, but trying to make a move. What about Amazon? Wow, 230. I haven't seen that in a couple of days on Amazon. Look at that. That's nice to see. Apple is at 270. Tesla again at 490. Google is also green. Tesla now 489. Google 310. Google fell to 305 yesterday. Meta just went green, which is also very, very nice to see. How about Grab? Are we holding $5? We are holding 520. That's up 0.48%. And then NVIDIA. Now, NVIDIA struggling to hold. Yeah, wow. NVIDIA just went red. That is crazy, dude. Gapped up to 184.60. Now, like, it's 8 cents green on the day, 183.75. But the fact that it's at least holding 180, I think, is bullish to see. Broadcom right there at 341. Novo's at 52. ASTS at 85.13. D-Wave still down 4% on the day. Palantir 193. Palantir holding the 190s is also relatively strong today. Tesla goes red. Choppy. Volume is really not that strong. Tesla volume, 3 million shares. Usually about now it's about 7 million shares. So Tesla volume completely down. Grab volume 1.74 million. Yesterday it was almost 8 million. Nvidia 9 million is kind of on track for its volume, but you're definitely not seeing explosive volume out of the gate. Where are all the semis? Semis are all green except ARM, ON, and SMCI. AMD just went green as well. Dell is up. Micron is up. Wow, Micron 280. That's all-time highs on Micron. That is all-time highs on Micron. Look at that, 280. Congrats to those that are in Micron. Volume on that one. Look, there's more volume on Micron than there is on Tesla. That is crazy. 2 million right there. The VIX is up a little bit, so you're seeing some of that action. Yes, we talked about the 0% China. I don't think it's that big of a deal, guys. The semiconductor 0% news. Like, imagine it was not 0%. We have a pretty good relationship now based on that trade deal. So, like, it's kind of obvious that we would not tariff a lot of things that come from China and that need to go to China and that come from China to the United States. So, I mean, you're not really seeing a massive bump on that news. It's good for the semis, but I mean, yeah, we kind of can't afford to put a tariff on a lot of those Chinese semiconductors. I mean, there's a lot of things we excluded tariffs on in China, including pharmaceuticals. As much as Trump says we want to build semis and pharmaceuticals in the United States, a lot of it right now still comes from China. And it's hard to avoid that. All the fintechs are down except PayPal, holding on to 59.89. So PayPal holding up a little bit. Oklo's up, D-Wave's up. A lot of these high beta names getting momentum. Oklo at 84.18. Oh, Kathy yesterday bought 100,000 shares of Oklo. She bought 400,000 shares of Archer. She sold Tesla, Palantir, Rocket Lab, and Shopify. She sold 232,000 shares of Rocket Lab, 60,000 of Tesla, 47,000 of Palantir, 33,000 of Shopify. Now, Tesla, Palantir, Shopify, she's had for a long time, so those are not that big of a deal. Rocket Lab, it was obviously her rotating from Rocket Lab into Archer and Oklo because she needed the money from somewhere to buy those names, and it likely came from Mr. Rocket Lab. So the question is, do Oklo and Archer outperform Rocket Lab? Rocket Lab goes green on the day, 77.50. And I don't know if that's necessarily going to be the case. BM&R right there. BM&R, are we down? BM&R, we are down 4% as ETH continues to get hit. There were reports last night that's not been reported yet, but that BM&R bought another 88 million of Ethereum yesterday night. So that will be disclosed in the next one that comes out. But they continue to buy millions and millions of Ethereum. Trump originally was going to charge AMD 15% exporting chips to China. Well, he's still charging. In fact, the NVIDIA is getting a 25% rev share on those chips. So that hasn't changed. That has nothing to do with the tariffs. I mean, the NVIDIA and AMD will still have to give up a certain percentage. I believe the number is 25%. Maybe it's negotiated down, but 25% to the United States. But like, there was no way in hell we could ever tariff semiconductors in China. Like, it's just too big of a business. And there's too much that would affect the actual supply chain of that. Remember, semiconductors are still the reason. SMH is the reason why the stock market has done so well over the past couple of years. We cannot let the semiconductor trade die unless the actual AI trade dies, which is a whole different question. But if the U.S. has any control over keeping the semiconductor trade alive, they've got to be reasonable in these policies. By the way, FJet down 40% in the market open right here. The stock was up 300% yesterday as a new space IPO. So that one is getting hit. Robinhood falls below 120, unfortunately. Palantir goes green at 194. So Robinhood probably getting hit because of crypto. Palantir at 194. That one going green. Where's Salesforce? Salesforce is flat. 0.39%. The Grab warrants have massive volume. Yes, I saw that yesterday as well. Look, my thesis on Grab yesterday was very simple. I think there's either a short that's covering because they know something's about to happen, and an institution that potentially is getting in because they know something's about to happen. Is that something going to happen? That something, in my opinion, is the GoTo acquisition. Who knows? I think the framework is set up for that. That's what happened last week with the GoTo shareholder meeting. So if something does happen, I think you have volume, technicals, a lot of things aligning, but that is going to be the big thing that we see. I don't think it's going to be any other headline outside of that meeting. In fact, I think that's been the overhang on the stock for the majority of the year as the institutions have continued to accumulate. And so if we get that headline before the end of the year, that could be a really good Christmas for Grab. Rocket Lab right there, 78.17. That one continues green. I think Rocket Lab, we hit a 52-week high today. 78.65 on Rocket Lab. Hitting a 52-week high just 5 minutes ago. as that one's green. Do you think BMR can reach 5% ETH prior to their Vegas meeting in January? I don't know if it's prior to the Vegas meeting because that's a couple of weeks away. They're at 3.7 right now. I do think they are going to announce staking at that Vegas meeting, and like really start making some money from their Ethereum as well. It's just when you lock up your ETH via staking, especially at the size that they do it at, they need to make sure like it's done correctly, which is why I think they've been waiting so long. So they'll probably get above 4%. I don't know if they get the full 5% by January, but that is something that we're going to watch out for. Mag 7 today are all green except Tesla, which just went red after being green. Nvidia back to 184. Amazon at almost 231. Amazon finally getting a little bit of love. Microsoft at 486. Apple at 270. Google at 312. And then Meta at 662. The SaaS names are all red except Palantir, Confluent, and Intuit. CrowdStrike, ServiceNow, Adobe, Mongo, Atlassian, Oracle, Salesforce, all of those red on the day. Same thing with Snowflake and Datadog. Snowflake got hit pretty bad after their earnings. So that one's still down about 10% from those levels. And then all the crypto names continue to be red. Cypher and Iren and Hut up a little bit more as they are more AI names now. But the rest of them still down. Tesla at 486. By the way, MicroStrategy, RDW, that's up as well, Redwire. MicroStrategy is raising more cash for its reserves. And one of the theories that people have is that MicroStrategy is going to be delisted from the MSCI index. And there's going to be a lot of forced selling when they get delisted. I don't know exactly why they have to get delisted. So if someone has the exact reason, let me know. But that's the main thing I've been hearing, which is that they're going to get delisted. And so Saylor's trying to raise a lot of cash to get ready for that moment, because obviously if they lose a lot of inflows, just technically because they get out of the index, that's not going to be the best thing for them. So that's one thing to watch out for as well. And I think that's why I think they raised another 700 million in cash, which they'll probably use to buy Bitcoin, but they also might use it to just buy their cash back or have the cash ready to be able to pay out their preferred dividends. Redwire right there, that's up 2%. Disney's at 112. Avatar 345 million. Second biggest opening of 2025. I did not watch it. I heard the reviews were really bad. But 345 million second. I think Zootopia was the biggest opening this year, right? So I mean, that's good. 305. I mean, the budget was 400 million for the movie, so the fact that they made 345 in the first weekend, definitely not something bad. Kratos, that's green on the day. Rocket Lab, are we pushing 80? Dude, Rocket Lab touched 79. Let me check the resistance on 80 for Mr. Rocket Lab. That is pretty incredible. That is pretty incredible. Rocket Lab right there, 77.59 as it just touched 79. 70, all right, so 80 resistance on the Lab of Rockets, 57,000 shares. 57,000 shares. Bitmine down 3%, Tesla 487, Google 312, Nvidia 184.31. You can find resistance just by, I just do it on Robinhood. It's level 2 market data, but a lot of other platforms show it. So if you Google level 2 market data, you can either pay for a service that gives it to you on Robinhood. It's just easy to access. And again, it's not perfect, but it gives you a general gist of how many shares are waiting to be sold at a certain level. ByteDance, by the way, we had a this morning. ByteDance is looking to buy a lot of NVIDIA and AMD chips. They are now doing 50 billion in profits as of 2025. And they told the CCP, hey, like if NVIDIA is ready to sell, we would really like to buy. So 23 billion of AI spending is what they are trying to commit to. And they're trying to get approval from the CCP to get these chips. Their argument, as per the Financial Times, is to keep pace with US rivals. But yeah, obviously bullish for the NVIDIA chips and the AMD chips if they can get sold. Odyssey is only available in true IMAX. Dude, you guys told me about Odyssey yesterday. I'm sorry, but I'm not interested in Odyssey. I want something original. I don't want a remake of a Greek myth that's being told in live action. So I love Nolan, but like that's not exciting for me to watch. Like, can we come up with something new and original and exciting? Like just a remake of a classic. I don't know, dude. Like that's not interesting to me. So I don't think I'm watching that, but I'm sure it'll do well in the theaters. It's just not that exciting to me. Disney right there, that's flat, 112. Salesforce still flat as well. Google trying to push 315 on the day at 312 right here as well. Thoughts on Salesforce? It's cheap. I don't like the narrative on Salesforce. They already gave you all the growth. They already gave you all the estimates for 2030, and the market still doesn't care. So I think they got to do something else to get the market to care. But it's cheap. I mean, it's also down 30% for the year. So it's like, do you really lose another 30% next year? I don't know, but do you recover that 30%? We got to see. Because if high beta gets hit next year, does Salesforce become the safety? I mean, there's going to be names where people run to safety. I don't know if it's Salesforce. But like names like Verizon, obviously a lot of those names that pay a dividend, they might be the ones that benefit from that. Rocket Lab right here, 78.25. Again, trying to go out to that $80 level. UAMY is pumping. This is a rare earth stock, right? Is UAMY a rare earth stock? Why do I think it's a rare earth stock? Or maybe it's not. This is, yeah, I'm not sure why that one's up on the day. I'll see if I can find some data. This is rare earth, right? Yeah, processing, extraction, processing, and sale of anatomy, zeolite, silver, and gold products. I believe they're a rare earth miner. Okay, well, I guess because silver's up, so that's also helping. I mean, all the commodities are up, not just silver, so that's helping the miners. SoFi right there, that's flat on the day, 27. Yeah, SoFi has been stuck in a 6% range for 5 months. Since August, SoFi is stuck within a range that maximum goes up 6%, minimum goes down 6%. I mean, it's quite incredible. And SoFi is one of the more volatile names in the market if you look at their implied volatility. So this thing has been amazing if you're running covered calls on it, because in covered calls, you need volatility for the premium, but you also need lack of volatility for, you know, the covered call going against you or going for you. So, I mean, you just have a lot of people willing to bet every week that SoFi is going to be a certain price, but it kind of just stays at those levels, which makes me believe that it's getting coiled up, and when it breaks out, it's really going to break out. But the question is, when would that happen? Amazon leading the Max 7s today. Look at that, 231.36. As that one goes green, I don't think there's any headline on Amazon. There's been a slew of headlines over the past couple of weeks that have been bullish for Amazon, and the stock hasn't reacted. So maybe today it's right. But again, dude, 4 million shares on Amazon in the first 15 minutes. That's nothing. So a lot of these moves are kind of hard to be super excited about if the volume is not necessarily there. Yeah, SoFi was stuck between 7 and 12 for a while as well. Kind of reminds me of that time as it was stuck at those levels. Tesla goes red again, 487. Nvidia, I think she really wants to break out to 185. We got close at 184.92, have not done it yet. Meta at 664. And then Rocket Lab at 77.69. I'll ask the same question I asked yesterday to everybody. What are people doing with Rocket Lab? Are you selling, holding, buying into the strength, selling covered? I think the most popular trade I've seen is sell the covered call and use that premium to buy the put to make it costless, or just sell the covered call and, you know, hedge your downside to an extent, which I don't think is crazy, dude. But I mean, if this thing goes to 100 and then normalize at 100, market cap's now 40 billion, 70 times price to sales. They're trading at 25 times price to sales forward. So for 2027 or 2026, yeah, I mean, this thing gets closer to an $80 billion market cap, or at least $70 billion market cap if it gets close to that $100 price, which is possible. It's just the space trade is going to need a lot of excitement there. Or Rocket Lab's just going to need like a massive, massive contract win, which they got on Friday. And that's why they got the momentum. But could they get another one of those? I guess the street excited. AMD just went red. Weird that AMD is red and NVIDIA is green. Did NVIDIA go red? No, NVIDIA holding on, unless NVIDIA is about to follow AMD. D-Wave is now down 1.4%, so that's recovering a lot of what it lost during the day or during the pre-market. And then Google, look at that, 315 on the Googs. 315 on the Googs. Yeah, I mean, I do think Palantir, Rocket Lab feels a little bit like Palantir, which is that the valuation on Palantir got very intense at 70.80. You had a lot of people sell out of it, but this thing was just going higher. And the only difference is Palantir was in the S&P and the NASDAQ. So you had tons of institutional flows coming in. Rocket Lab doesn't have that yet. So it's really retail supporting it. But Rocket Lab gets a hint of that. And maybe the institutions get excited. As again, I mean, like retail's playing it as a SpaceX proxy. So the institutions might also say, hey, instead of buying SpaceX, we'll just buy some freaking Rocket Lab. So you could have multiple vectors that could lead to a bit more of its excitement. Not to mention the data centers in space. That could be a big deal. Trump just tweeted. Okay, let's see. Trump said, I just had wonderful phone calls this morning with the president of Kazakhstan and the president of the Republic of Uzbekistan. We discussed the importance of bringing peace to ongoing conflicts and increased trade and cooperation between our nations. The relationship with both countries is spectacular. The United States will be hosting the G20 summit next year, and we will be extending invites to both those leaders, which will take place in Miami. He then said, the tariffs are responsible for the great USA economic numbers just announced, and they will only continue to get better. Also, no inflation and great national security. Pray for the U.S. Supreme Court. We're SPY. Wow, SPY. She's pushing. She's not that far from all-time highs. And then Trump said, the New York Times is fake news. They are lying to the American public. They are a true enemy of the people. Okay, so you had a New York Times tweet, you had a tariff tweet, and then you had an update on his phone calls for geopolitical conversations. Yes, that could be big for the Russian negotiations, which is why I think he posted that just now. He sent an ultimatum to Zelensky 2 weeks ago, and from the reporting from Politico, Zelensky is very open to officially signing that, but we don't have actual confirmation yet. But those are the tweets this morning from Mr. Trump. We are minutes away from the crash. Well, it's 9:50. I mean, we've been getting a 10, 15-ish slam pretty much every day over the past couple of weeks. So maybe we see that again. The heat map is kind of flat to unchanged. It's green and red at the same time. Oracle leading the way with the red in tech, ServiceNow as well. Everything else, not necessarily going to hit that bad. Amazon leading the green for the Mag 7, as that one is holding on. Visa headline, U.S. holiday spending as per Visa's analytics is up 4.2% so far, which once again goes to show the consumer is not as bad as people necessarily thought. You're seeing that the same thing from Adobe Analytics and Shopify's reports. Klarna also put out some details. Klarna reported triple-digit holiday spending growth in retail. Entertainment spending was up 130% year over year. Experiences up 115%, and automotive spending was up 110%, including repairs and maintenance. Now, again, the data is coming from Klarna, which is a company that allows people to buy now and pay later. So one of the arguments might be that, of course, spending is up on Klarna because people are doing it on credit, which is a fair point. But nonetheless, you are still continuing to see more spending. The other thing about Klarna's business model that people misunderstand is that the consumer is not necessarily the one that's paying the interest. It's the merchant. And they just have a really good relationship with lots and lots of merchants. But that doesn't deny the fact that the consumer is obviously taking on more debt. SoFi getting hit right here, potentially looking at below 27. NVIDIA still holding 184. Hood's probably down as well right here. Hood 118.96. It's down 2.8. Seeing some more red candles pop up. If we see SoFi below 27, we'll probably see a little bit more red in some of these other sectors. S&P, it's green, but it's down from 686. Snapchat's down 1.7. ARK's down 1.3. Coinbase down 2%. AMD down 0.5%. Block is down. Roku's down. DraftKings is down. MicroStrategy down 2. Microsoft up a little bit. Qs are up. Yeah, but the Qs kind of feel fake. Yeah, Qs are up $1. See, a lot of, again, the real breakout I think we've all been waiting for, we have not seen, which again is crazy to say given the S&P is trading less than 1% away from all-time highs. but it's not the type of all-time high move that you'd expect, given Amazon is still up 2% year to date. Meta's up 10% year to date. Nevi is down 2% after a monster move over the past couple of days. But I also said this on X yesterday. I feel like we all got to be grateful regardless of where we end. I mean, if we end out at, if the market ended today, I think all of us would be pretty grateful, even if it's not all-time highs like it was in October. And I think that's important to be relatively grateful for a lot of the excitement that we had this year. I mean, if you bought the dip in April, you're happy, regardless of if you're not at October all-time highs, which I know a lot of us are not at. But I think that April dip kind of defined the year. I think there's always a moment that defines the year for the market or for your like portfolio. And sometimes it can be one stock. I mean, like you don't really need a ton of ideas. You can recycle through a ton of stuff. But if it's sometimes it can be one or two names or one or two moments that you took advantage of that completely make the entire year for you. And for Circle, the Circle IPO, a lot of funds got in on that thing at $30. It's at 82, and it pumped all the way to 300. And even after the 6-month lockup, I think they got to sell around 170. That made their year. It's a 4x for the year. And they didn't kind of need the rest of the year to be excited for it. Now, Bitcoin ended up not making a lot of people's years. Goodness, 86, back below 87. The chop on Bitcoin back and forth has just been incredible. By the way, there was a rumor that Trump media bought Bitcoin yesterday. They came out today and they said they didn't. The rumor yesterday was that they bought 40 million of Bitcoin. And they came out today and said DJT did not buy any Bitcoin yesterday. Home prices are up 0.2% in November, the slowest annual growth since 2012. That's some data that we got from Redfin this morning as well. A lot of people still arguing that homes are very unaffordable right now. But 0.2% increase is the lowest in over 10 years. And then Trump media denied a $40 million Bitcoin purchase, asserting that no new purchases have been achieved at the company. I think Tesla will be 500 by end of year and hold it. Well, it's close, right? Like, that's the thing. Tesla's very close to getting there. Like, one piece of headline, this thing shoots up immediately. It's got to be a good headline, but it's less than 2% away. So I think it can get there as well. But I also wonder, does the market need to help Tesla to get there? Right? Or will Tesla just naturally go against the market and figure it out? Disney 112. ARK, by the way, ARK has had a pretty good year. I mean, ARK's definitely beat the S&P 500. If you went long ARK beginning of the year, you're up 41%. I know ARK had a pretty crappy last couple of years, but this one still has not been too bad for this year. 41% on ARK Innovation. We're so spoiled. I went down from 80% to 22% gains year to date, and I'm devastated. 22% is a good year. Yeah, 22%. I mean, like, again, my thing is if you beat the S&P by anything, that's a good year because it's so hard to beat the S&P. It's easy if you pick the right stock and you kind of go heavily concentrated, right? Then it feels like it's very easy, but it's also hard to pick the right stock, right? Stock picking is not easy. So S&P is up basically 15% this year. If you beat that, I think you got to be happy with yourself. Wow, SoFi below 27. There she goes, 26.94. Nvidia, she's losing steam. Robinhood, unfortunately, losing steam as well right here. 118 did touch 117 on the day. And Redwire, that goes down 2%. Where is Rocket Lab? So Redwire was up 8. Now it's down 2. Rocket Lab is down 2 as well. Okay, so there's a little bit more of the red candles coming across the board. I bought ARK when it was under 40. No regrets there. That is fair. ServiceNow, yep, they're acquiring that company. They're also doing a stock split soon. ServiceNow down 2.28%. The street is not happy about a lot of what ServiceNow has been doing. But they've been continuing to get hit even after some pretty good results. GDP 4% and Amazon barely moves. Yeah, I mean, I wonder if the narrative becomes if people believe GDP. That's the issue with lack of trust. I mean, you got so many people that don't believe CPI. I mean, GDP is a little bit harder to fake, in my opinion, because it's a lot more aggregate data that's not really rooted in like polls or surveys, but like actual company earnings and purchases, retail sales, etc. But I mean, we're gonna see. We're gonna see as how much the market cares about it. And again, it did give us a little bit of a move on the S&P. Across the entire board. This is what Doug McDermott said, or Bill McDermott, on the acquisition that ServiceNow made this morning.
Plus, delivering 20% plus revenue growth for the last decade. So, to be clear, we don't need to buy growth. We already have growth, and we're very comfortable with all of our midterm projections. But what this does for us is real simple. It extends our configuration management database, which is easily our greatest competitive advantage, because Armis automatically discovers and inventories insights from billions of connected assets. And customers can now see, understand, and protect their environments. So, as you rightfully point out, IT is the digital backbone of a business, managing laptops, servers, and so forth. But OT, operational technology, is the industrial complex of assets like assembly line components, robotics, hard real estate, and then IoT, which is...
So there you go. It's pretty boring what he's talking about, but Bill McDermott looks like a cool guy, and that's his justification. I mean, I don't know how much more boring it can get what he's explaining, but the street just doesn't care. It's probably accretive to shareholders. It's just, once again, the street is very annoyed with these these SaaS companies that are saying AI is the future, and then they can't grow organically. They have to acquire other companies. But again, inorganic growth is not a bad thing. It's just there's not a lot of software companies that are just growing because of the AI momentum. I mean, honestly, the only one that's doing it is Palantir. Everyone else is trying to find. Even Palo Alto acquired 2 companies this year. Like, it's tough to grow when you're at a level that these companies are at. And that's the biggest risk for Palantir. Can they keep up the growth, right? Because if they don't keep up the growth, that's when they can get hit. But if they do, they're one of the only companies that doesn't really have to acquire companies for $8 billion just to grow. ServiceNow right there, 153. That's down 2% on the day. Oh, we got December consumer confidence, 89.1 versus 91.0. I think that just came in. Okay, that could also be why we're seeing a little bit of pain. Now, we saw consumer confidence on Friday that also was relatively weak, but at least the inflation expectations were weak as well. But that is your data right there, and that's potentially creating some pain here as well. Why is CoreWeave down? It seems like all the data center names are down. Hood is tanking. Guys, again, I mean, we talked about this last week. We talked about this in depth on Hood. At the end of the day, they were a proxy for the bull market. So if you have volatility and weakness, this is one of the first names that's going to get hit. Now, again, if you have a massive V-shaped recovery, this is one of the first names that recovers. But it's also not just Hood. It's anything that's super high beta. Hood is just very high beta. Just the data centers are also high beta. Like an Oracle OpenAI headline affects CoreWeave at a beta that's significantly higher than the rest of the stock market. Bitcoin going down affects Hood at a beta that's significantly higher than the rest of the stock market because they're intercorrelated. And so I don't think that's something Hood can necessarily avoid. And you have to know that going into it, and you have to understand that if you're holding it. Same thing with the data center plays. Like Nebius was at 95 yesterday, now it's at 89. Is there any reason why? Like, no, there's probably no reason why. It's at 78 on Friday. Could it get back to 78? Sure. If any random data center jitters enter the market. And I think one theme going into 2026 is if you are leveraged into something high beta or you're holding something high beta, you have to be okay with your margin of safety. So for example, if you have a Hood average of 50 and the stock's at 120, let's say the stock goes to, let's say worst case scenario, 70 or something crazy like that, which I don't think it gets to, but then again, who knows? You have a margin of safety. You bought it at 50. And if you have enough of a time horizon, you can, but if you bought it at 118, then you're going to be bag holding 40% down. That's the broader question. Same thing with Palantir at 191, Rocket Lab at 75, which now is below 75, down 3%. Same thing with Tesla. If you bought Tesla at 210 on the Tim Waltz bottom, I mean, if it goes back to 350, it'll be annoying, but like you're going to be okay. If you bought Tesla at 490 and it goes back to 350, it's going to be ugly. So I think that is the argument for high beta of next year. What is your margin of safety holding on to high beta? And are you willing to do, look, if you buy SoFi at 27, if this thing goes to 23, are you willing to DC? Like, yeah, if it goes from 27 to 23, I think I'm just getting a better deal, even though I think 27 is relatively cheap. But if Tesla goes from 450 to 300, are you willing to DCA? Which I would, but I also wouldn't want to have an entry of 450. And I think those are questions that everyone has to ask themselves. Bitmine right here down 7% as well on the day. Hood should hold Bitcoin on their balance sheet. I personally, as a Hood shareholder, would not want that to be the case, just because I don't want more volatility in the stock. They already are so correlated with Bitcoin because they custody, I think, like 40 billion worth of the asset. S&P just went red. So if Bitcoin goes down, Hood, inevitably is going to have to deal with the hit from that. Coinbase should own more Bitcoin, though, for all the crypto glorification they engage in. I mean, like, them not owning more Bitcoin to me is very weird. Coinbase right there down 3.43% on the day. Bro, call Santa, please. I don't know if my call to Santa can help anything. Although we are a little early. Remember, Santa Claus rally takes a couple of days. The thing about the Santa Claus rally, though, I've been thinking about it last night. Let's say we do get a Santa Claus rally. Like, does it matter if January ends up reversing it? Like, let's say for 3 days we get a 1.4% pump, and then we just give it back. I mean, like, it's going to be the most anticipated rally of all time. That it only matters if you take profits into it. But then again, that would be trying to time it. So it's like, as much as we want to see it, like, let's say Nvidia pumps to 190 on the Santa Claus rally, then it just drops right back down to the 180s. Like, it'll just make Christmas and New Year's feel good, but that's it. Unless we have a massive, massive move, which, again, even historically, 1.2%, it's like, all right, it's a good move, but it's not like some crazy 4 or 5% upswing that allows individual stocks to be up way more than that. Amazon, one of the only names holding on to its green. Everything else, Rocket Lab down, Tesla down, DJT, Qs, Nvidia just went red, SoFi down 2%, Disney, Kratos, Salesforce, AMD, BMNR, Oklo, all of them going red. Another Trump tweet. Let me see. Is he causing this? Is he causing a little bit of pain? Nvidia could go to 190 immediately. Yeah, I think, which is why it's crazy that it hasn't really gotten back to those levels. It's struggling to even touch 185. Let's see. The Trump Kennedy Center honors will be broadcast tonight on CBS and stream on Paramount Plus. Tune in at 8 p.m. Eastern. Yeah, Netflix is not getting Warner Brothers, bro. Netflix is not getting Warner Brothers. Trump's out here openly advertising Paramount Plus. Sorry, Netflix. You had a good attempt. That shit's not happening. That shit is not happening. We will be honoring the true greats of history and entertainment. Tell me what you think of my documentary. He says, if I'm really good at being an MC, would you like me to leave the presidency in order to make hosting a full-time job? Tune in at 8 p.m. Eastern on Paramount Plus. Goodness, bro. Again, I'm just kidding. I do think Netflix ends up walking away with this, but the headline yesterday was Larry Ellison is really motivated to get this done to the tune of 40 billion. Paramount flat. Where's Warner Brothers? Warner Brothers 2888. I guess Trump is hosting this thing because he's saying he's going to be the MC of this event. Oh, it's going to be a live event. It's going to be a Trump Kennedy Center honors will be broadcast. Okay, so it's a live event on CBS and Paramount Plus. So that's why he's saying I'll be hosting it. If Warner Brothers backs out, they have to pay Netflix billions. That is also true. There is a breakup fee that goes both ways there. Rock Lab at $74.96. Look, it comes down to, can Ellison get this done? And I think if they offer like $31 a share or something that just increases it by even a little bit, that's where it becomes more interesting. But at the current deal level, just saying that will be good for the money is not enough, I think, to get the market excited. Apple and Google still holding on to the green. All the data center names continuing to go down. Where's that IPO from yesterday? FJet. 40%. Dude, I wish this thing had options. As soon as I saw this last night, I was so ready to buy puts, but it just went public, so there's no option chain. I mean, there's just no way in hell it could go up 300% after IPO because of the space trade and not be down. And someone bought this thing up 300% yesterday. They're down 40% today. And Rock Lab's only down 3%, which goes to show how much hype. But what about Saidu Space, that other space name? Well, that one's down 35% today. I mean, it's incredible. Someone was buying this thing up 220% yesterday, acting as if this thing actually could make a move, even though there's nothing that special about it outside of space being in the name. I know they got a contract, but like, again, getting a contract is not a complete reason a stock should go from 30 million to 90 million like it did yesterday. DJT slightly green, Circle down 6%, and then Bitcoin just below 87. I guess consumer confidence could be one of the reasons we went red, although it's not that bad. 89.1 versus 90.2 expected. That was the number from yesterday. Let me get a little bit of coverage on consumer confidence. Let's bring this up right here.
December consumer confidence from Conference Board expected to come in around 91 is a disappointment, comes in at 89.1. However, last month's 88.7 shoots all the way up to 92.9, which makes this number at 89.1 the biggest since the revision of last month. And last month's revision at 92.9 will be the best since the month before that, October, when it was 95 and change. If we look at the present situation, it comes in at 116.8. This is a huge miss. And in the rearview mirror, subtle revision from 26.9 to 126.3. 116.8 would be the weakest since Feb of 21. And finally, what may lie ahead in the form of expectations comes in at 70.0. That would be equal to the revision now at 70.7 in the rearview mirror. So back-to-back 70.7s, and both those would be the best since the previous month of October. Now, it doesn't end there. We have Richmond Fed Manufacturing at -7, weakest since the previous month of October. And on the business side, which is the service side, -11, also the weakest since the previous month of October. These numbers aren't good, and they continue to show weakness, especially in manufacturing. Okay, we hit a 420 yield in 10-year. Any yield close above 419 would basically be 3.5 months.
He is right. That 10-year continues to track higher at 4.2. So, look, those consumer confidence numbers are not amazing, but they shouldn't be the worst. And, guys, sorry for the lag. The audio shouldn't be lagging, even if the video's lagging. I'll have my better laptop for the market close, so we shouldn't have to deal with the lag. But it's not the Wi-Fi. It's actually my laptop, just using a worse version of the Mac. But that consumer confidence number likely is the reason we saw a bit of pain. Now, granted, is that enough to give the markets full-on red for the day? A 2-point miss on consumer confidence? I don't know. I don't know if that should be enough, if that is the only reason we have. Fear and greed. We were at greed yesterday. Or were we at greed yesterday? Yeah. Are we still at greed? Yeah, we're still at greed, folks. 57. 57 on the greed index. So, again, it's not something that people can be, I think, too upset about it for their. VIX is only 14. It's a weird argument, right? VIX is only 14. Fear and greed's at 57. Although some of the most important companies are not really participating in the run, there is a run that's happening, and that run, even if it's not in NVIDIA or AMD, is keeping the market afloat. So it's hard to be super upset about kind of how it's playing out. And this piece of news I thought was also interesting this morning. We had the Citadel report, so let's get a little bit of coverage on that. If you beat 9.3%, you beat Citadel this year, but they've been also able to play this market to still be able to make some momentum in terms of their trades, even if the high beta names are not all participating.
Fund gained 9.3% in the year through last week, said the person who asked not to be named, discussing performance details. The profit being returned is not all that was generated in 2025, that person said, but rather it's a way of constraining capital amid what the fund managers there perceive to be a limited opportunity set going into the new year. As such, Citadel will start 2026 with $67 billion in assets, down from the $72 billion it currently manages, that person said. A spokesperson for Citadel declined to comment, and Citadel does not opt for profit distributions every year, but since 2017, the hedge fund has returned $32 billion to its investors, guys.
Yeah, interesting, the attention to capacity constraints in multi-strategy, which is the biggest, I guess, single category of hedge funds now.
So again, that's a really good return for a hedge fund, even if it's not as good as it was to investors that just picked one stock and went all in. But for what Citadel is doing, and by the way, I found this stat out yesterday. Citadel returned 40% in 2022 when the S&P was down 20%. And this is why they continue to retain the client assets that they get, because although they underperformed the S&P 500 this year, particularly because one of their nat gas trades didn't go that well, when things get ugly, that's where you need hedging. And when things got ugly in 2022, investors in Citadel massively outperformed. And so I think, that's why they continue to generate broader returns as well. Yes, we will have Technical Tuesday today. We should have Technical Tuesday. That'll be live later today. Yes, I'm still in BM&R. This one down 6%, 29.21. Look, I have a relatively full position at this point, so for me, a dip needs to be a lot more aggressive. I think now here's the thing. You got the internal team at Fundstrat saying they think ETH could go below 2,000. If that happens, I mean, it's going to be ugly. If that doesn't happen, then I think we at least stay relatively flat. That's also part of the reason I hedged Hood as well. I mean, if you do get a lot of crypto volatility, multiple names, BM&R, Hood, Coinbase, MicroStrategy, they're all going to get hit. So the question then just becomes, are we in crypto winter or not? And honestly, I don't know the answer to that question. I really don't. And I feel like if we do get a crypto decline, I think it'll be short-lived, because I think there's just too much money that's going to want to get access to these assets at lower prices. Unless everyone wakes up and is like, it's all a sham, it's all been fake, which, again, is possible. But I do think it's been more normalized institutionally than not. Bitcoin back above 87. So yeah, but I can't blame anyone who's short BM&R or has puts on BM&R. I mean, if crypto gets hit, that stock, along with a lot of other crypto derivatives, are going to get hit with it. Nebius right there, down 4% on the day. Meta just holding above 661. I don't have any thoughts on EchoStar. I don't know enough about them. I know they've already pumped 300% this year. So I would have to go deeper into this. I'm just, guys, I'm very cautious of a lot of these space names that are popping up. Like, as more and more people get hyped around the space names, it either becomes way too much hype or it becomes a trend you have to have exposure to, which I do with Rocket Lab. So I'm not really that interested in finding all these new random space names that people are mentioning that have already run like crazy. I mean, it reminds me of the data center trade. When Iran was at 70, 80, people could not stop talking about this thing. It had already done a 7x for the year. Like, at some point, you have to be like, look, I missed it. It is what it is. And then obviously it ended up correcting because that just wasn't sustainable. But it's still up 4x for the year. So if you bought in early, you just can't be that upset. Nebius corrected, CoreWeave corrected. All those got split in half. So unless there's something real to the space trade outside of SpaceX IPO, which is there something real to the broader like Thematic, yes, which is why ASTS, Rocket Lab, those companies are doing great. And they probably will do great over the next decade. But in the short term, a lot of it just feels like hype. A lot of people just are piling in to get exposure to space, which usually ends badly. And that's what we're seeing with FJet and Saidu, both down 45% on the day. And so I don't know if that's the biggest idea. Also, again, SpaceX is, I think people are putting SpaceX on too much of a pedestal. Phenomenal company, great company. But at the end of the day, it's an Elon company. And are we forgetting how much volatility Tesla's gone through? Tesla's had massive valuations, and then it gets corrected right back down to like 5 years of stagnation. Not saying SpaceX has to go through that, but if SpaceX comes out IPO out the gate and it's worth 1.5 trillion, I'm like, where's my upside? Dude? Like at the end of the day, the valuation comes into question, the broader growth comes into question. And SpaceX probably will be growing faster than a lot of other tech companies. But at 1.5 trillion, am I buying this thing for like 3 trillion, 5 trillion? If Nvidia's struggling to hold 4 trillion, SpaceX going to hold a third of that? Like, there's a lot of hype on SpaceX. And you know why this hype is happening? You got to remember, a lot of the reason the hype is happening is because of, in my opinion, people that want liquidity. People have been in this freaking private stock for years and years and years. They want to get an exit. So obviously they're going to start pumping this thing to make sure that people buy it. And retail is going to be like, oh, I get access to SpaceX. It's like, dude, just getting access to SpaceX is not the, like, it's not the end all be all. So I don't know. I'm not really buying the hype into it. I don't want SpaceX shares. My proxy is Rocket Lab, but I don't think chasing the space trade here makes a ton of sense. It could work, but if you chased it yesterday on 2 random space names, you're down 40% today. Now, again, the best companies like Rocket Lab and ASTS, even though they're trading at a premium, they probably deserve that premium. But the other derivatives, I don't know. Same with Palantir on the valuation, but you're still holding Palantir. Yes, but I bought Palantir at $6. That's the difference. Bought Palantir when it was worth $15 billion. People are excited to buy SpaceX at $1 trillion. Like, okay, that's fine. But the same thing with Databricks. I'm not buying the Databricks IPO. I don't care how fast they're growing. I'm not buying a $200 billion IPO. If Anduril pumps to like 120 billion, I'm not buying that either. Like at some point, I want to buy something where the ups. And by the way, if we are later in the cycle of IPOs, we saw what happened with the SPACs in 2021. All of them collapsed. Pretty much all of them. The only one that's realistically survived was SoFi because they're actually a good company. All of them got hit. So, yeah, I don't think we have to be hyped up on. I mean, look at Fermi. Fermi was a stupid data center stock, down 40%. Why? Because they lost one customer. So how is losing one customer ruined their? They're down 73% this year, dude. They were at $28. They're at $8, and people were hyped up on this because it was in a data center theme, and the data center theme got people excited. And then they lose one customer. One customer ruins the business. That's how fragile this company was. And like, you got to be very careful of these IPOs, especially when they're pumped on a thematic, and then they're dumped on people that want to get access to that thematic because they feel like they're special because they finally get access to it. And then in reality, they're just exit liquidity. Now, long term, SpaceX is going to be incredible. It's just, I think people are way too hyped for the IPO if we don't get any massive excitement on it. What else do we see? Palantir right here, 193. Do we have any other headlines? Macro. I think consumer confidence was the main one. We don't know the ticker yet for SpaceX. SPCX, I think, might be the one that people are thinking. Rango says growth is accelerating SpaceX, but agree, a lot of hype. Yeah, look, it's going to IPO and it's going to be worth probably over 1.5 trillion. That is going to happen. My question is not what is it worth, is when did you get in? So even the private offers that I'm getting to get in at 880 billion with the 20% carry, 5% fees, 6-month lockup, I'm like, no, that's not a deal. That's exit liquidity. That's not unless SpaceX go to like 2 or 2.5 trillion and it holds that valuation for multiple months where it's worth the carry, the fee, and the lockup period, because a lot of things can happen in 6 months. A lot of things can happen. I mean, then it's just not a deal. What is a deal, though, in my opinion, is NVIDIA, which finally breaking through 185. Look at her go. It has taken almost 2 weeks to get back here. And we're at 185. Like, I'd rather buy 185 on NVIDIA versus SpaceX here. But you're getting some momentum on the biggest company in the world. What about AMD? AMD not green yet, but it looks like it wants to go green. Hopefully that follows NVIDIA. As NVIDIA continues to hold on to its momentum. Or at least get some momentum on the day. Not exit liquidity when these people can get double at IPO. Okay, so that assumes you can actually double your money at IPO. Because the person selling the shares is getting a 50x at IPO. Just on the baseline valuation. And again, you have a lockup period. So even a lot of the Figma insiders, they didn't get the benefit of that stock going to 150 because within 6 months, that stock was back down to 40. If you don't have a lockup, which I'm imagining like a Google, a Fidelity, are probably not going to have a lockup because they've been investors for so long, they're the ones that are going to get a lot of the benefit. As an individual investor, I think it's just a little different. But again, I think it's easily played through Rocket Lab. That is, to me, the simple proxy on this name. Also, Fly's been getting a lot of credit as well. Fly Aerospace, this one down 5% after being up 14% yesterday. Again, a lot of these names pumped yesterday. They're getting a little bit of a dump today, but still a massive move. This one was also $50 back in August. So the fact that this one is retraced, I think, makes it also a bit more attractive. NVIDIA continues to move. I don't know if there's a headline on NVIDIA, but it's moving independent of the market. Market's not moving with NVIDIA here. SoFi dip is being bought as well. Thoughts on ARM? ARM is great, but what's their name? SoftBank is leveraging a massive margin loan against ARM to be able to complete their buyout of, or not their buyout, but their investment into OpenAI. So ARM is trying to get a $22.5 billion loan to finish up their investment into OpenAI. Or sorry, SoftBank is, but they're using their 90% ownership against ARM to get the capital against it, which is kind of crazy. SoftBank is literally saying we will take money against our ARM holdings to put into another AI stock, and we need 20 billion of a margin-backed loan. I think they're going to the Saudis to get that loan to then put it into OpenAI, which makes me pretty damn bullish about OpenAI, to be honest. The fact that unless SoftBank is just an idiot and all these other investors buying it at 830 billion valuation are stupid, it does make me think that OpenAI is probably showing more momentum privately than what we're seeing. Trump administration to start seizing pay of defaulted student loan borrowers in January. Wow. Okay, so I guess if you did not pay your student loans, you got the Trump administration coming in to try to collect those loans. A lot of people thought a lot of those loans would be shifted into SoFi privately, but that has not officially been confirmed yet. I don't see an NVIDIA headline. I don't see anything crazy right here. Yeah, nothing on NVIDIA yet, but that is a Trump headline for student loans. Again, this is another bear argument for the consumer. Like, for the past 5 years, people have not had to pay their $500, $600 a month for the consumer for student loans, and now they do. And a lot of people can't afford to do that. So that could result in more defaults. It's just the problem is you can't default on your student loans. Yeah, I don't see any NVIDIA headline, by the way. 185 is good if it can hold it, but maybe the China stuff, even though that's old news from this morning. XOVR has some SpaceX in it. What do you think about them? This is similar to like the Destiny Fund that has, there's a lot of these funds that, I mean, ARK has a little bit of SpaceX in their venture fund. Look, if you really want that much exposure to SpaceX, then yeah, these are names that you can take a chance on, even if they're not direct full-on exposure, because, you know, there's percentages of other companies that are mixed into the ETF, which could dilute the returns even if SpaceX does well. So I've never been a fan of those, but I just think there's easier proxies to play versus SpaceX. Also, if you're an accredited investor, I mean, again, you can go to Hive, HIIV.com. You can get access to SpaceX. You'll have to pay a little bit of a premium. You're probably not going to have to pay $1 trillion, but you're probably going to have to pay close to 850 to 900 billion. SpaceX is trading right now at $285 a share on their website. So if you really, really want it, like, there's plenty of people willing to sell it. My question is just, why are those people so easily willing to sell it before they go public? It's maybe because they don't want to hold on to it in the public markets, at least at these levels. Palantir 192, ServiceNow 152, S&P back to 685, and then Tesla 46 on the day. VIX goes down again. Marvell making a move. Seeing some of the other semis also make a move. 86.11, that's up 1.54. More than 5 million student loan borrowers are currently in default, and the total could swell to roughly 10 million borrowers soon, the Education Department said earlier this year. I paid off my student loans in August. So I am done with student loans. But obviously there's a lot of them. There's 1.4 trillion of student loan debt that's out there. I don't know, dude. If people don't have the money to pay it, they're just not going to pay it. And obviously the Trump administration can try to do what they want to do to collect that money, but it's the sad truth about student loans. There's people that took out loans, got jobs that don't necessarily pay for the loans, especially with all the other expenses that it takes. And you can blame the individual, personal accountability. That's also fine. I think there's a broader structural analysis of the system that's even able to give them that much money at such a young age for a degree that might not pay it back. And so I think there's definitely an individual accountability problem there, but there's also absolutely a structural problem in the United States with student loans that we are not dealing with. And so if you don't have people paid back, I mean, I'm not sure how the administration necessarily is going to collect that money. And again, I think the accountability stuff absolutely matters. I mean, I remember I worked my ass off senior year. I paid off 30 grand in student loans. Like every dollar I made was just going back. I made a mistake. I made my last payment in February of 2020. And we all know what happened after that for 5 years. That 15 grand that was my last payment, at least for that time, for that semester. If I just threw it into the market, I would have made so much money. So it was definitely a stupid decision. But I thought I was being responsible. I was like, look, I'm paying off my student loans. It's a good thing to do. So there's definitely an accountability part to there. But it's also like someone getting a $200,000 loan to study something that they know is not going to be profitable. And the school knows it's not going to be profitable either. I don't know, dude. It's predatory in my opinion. It's very predatory. And the fact that we don't do anything about it is even worse. So no, I was not living in my parents' house. I dormed. I paid for dorm, and I stayed in a dorm for 2 years, and then I had an apartment on campus. It was $500 a month for rent. I lived with 3 other guys. It was actually a really decent house, dude. I had a small ass room, but for $500 a month, I mean, like it was very livable. But I paid it off. You know, I knew that I had to pay it off, and so I freaking worked hard to pay it off. But also, it's like, you know, I had the benefit of my debate career in high school, which I then turned into a consulting business. So I had a skill that I can monetize that was allowing me to pay it off. And you can't expect every 18-year-old, 19-year-old to have that as a society. Like, you just can't expect them to go become entrepreneurial at such a young age to pay off their loans. So, like, as a society, I don't think we can expect them to do that, but we also can't expect to then give them $200,000 and act like they're going to make the smart decision. I mean, you wouldn't give a $200,000 business loan to some 18-year-old kid who doesn't have a good business plan. So why are we giving it to people that are studying something that we know is not going to be valuable, especially in the age of AI? A lot of this shit is just not going to matter. My son pays $4,000 a month in student loans for him and his wife on a 20-year loan. Wow, $4,000 a month, bro. That is crazy. That's what people have to do sometimes. Or did you mean to say $400 a month? The 400 sounds more reasonable. The 4,000 would be crazy. My highest interest rate on my student loans is 4%. Yeah, I think mine was like 4.7 at the time. That's why in August I just got rid of it, dude. I was like, you know what, let me just finish this and get it over with. The relief that it takes off you is also really nice. But I mean, if you don't have people paying for freaking 5 years, they're obviously going to be shocked when you start asking them for a ton of money, even if they know they have to pay it. But I do think there's a bull case for SoFi if they can privatize a lot of those student loans. Question is going to be if they get that level of business. Let's see what other headlines we have right here. Again, I don't see the reason for the NVIDIA pump. We got a housing headline from Trump, or some analysis on housing. Let me pull this up, see what we're looking at.
Our next chairman of the Federal Reserve, someone who believes in lower interest rates by a lot, and mortgage payments will be coming down even further early the new year. And you will see this in the new year. I will announce some of the most aggressive housing reform plans in American history.
That was President Trump last week teasing big changes to housing policy in a speech on the economy, though he offered no further details. Meanwhile, National Economic Council Director Kevin Hasset on Sunday saying the Trump administration will share a, quote, big plan in the new year that's going to be very good news for the American people who feel like it's not affordable to buy a home anymore. So what might that big plan be, and what does it mean for home builders in 2026? Joining us now here at Post 9 is Senior U.S. Home Building and Building Products Equity Research Analyst at UBS. John, any thoughts on kind of what we could see from this big new plan that could impact affordability?
Thanks, Leslie. Yeah, so I think there's a few things. It could be short-term, intermediate, and then housing emergency. In the short term, we could utilize the GSEs to subsidize mortgages, to buy more MBS for their portfolio, and to reduce G fees. G fees could be 60 basis points on a loan. Right? We could also reduce tariffs. It's $9,300 per home in tariffs, $2,500 on lumber alone. In the intermediate term, I think what could happen is you could influence folks, younger folks, to get more involved in the trades. That could be done through grants or through scholarships, things that will help rebuild the workforce.
If younger folks cannot pay back their student loans, it's laughable that the administration thinks younger folks are going to participate in home building or the ownership economy of homes. I mean, again, it's definitely not the easiest picture to imagine playing out for young people in their overall home ownership over the next 5 years.
We could also start building on federal land, which the government has sort of teased, and cut down more lumber. And then in a housing emergency, I think this is the area where the feds can put more pressure on the states to kind of reduce restrictions on land requirements. Now, the problem is that a lot of this is decided at the local and municipal level, and NIMBYism is alive and well. And so it's tough to get these things to actually work.
Yeah, I was going to say, building on federal land, I mean, where would that be? Are those desirable places for people to live? Is there infrastructure? Is there running water? Is there electricity in some of the places that would even be possible, with the idea, of course, of kind of expanding supply to drive down houses?
Well,
housing.
Now, the 50-year mortgage is the other idea that Trump bought up a couple months ago. I think that idea has been a little bit, let's just say, delayed by the administration in terms of getting more publicity, especially after the pushback was not that good. It was Pulte's idea, but Trump ran with it, and Trump got pissed off that the idea didn't do that well in the media. But they're going to have to think of some new innovative ways, especially because mortgage rates are not coming down dramatically enough to incentivize homeownership, even though we're dropping interest rates. The craziest thing that could happen next year is, let's say we drop rates another 2 or 3 times, so another 75 bips, and the 10-year is still basically at 4.1. I mean, I don't think we would have ever seen anything like that, where the 10-year holds that level of yield, because investors still do not feel, I mean, you would have to get rates at what, like 2% or something to get the 10-year down. So we really do got to see that yield come down next year with overall rates coming down. But if that doesn't happen, then, I don't know where the bond market starts pricing a lot of these longer end yields. I just rent if we're talking about 50-year loans. Yeah. At that point, it's basically renting from the bank for 50 years, which is the funny part about it. Nvidia's still making a move. 180. Nvidia's the only one moving, though. I mean, Nebius is not really moving. CoreWeave's not moving. They're still down 4 or 5% on the day. Broadcom's not moving with it. AMD's not moving with it. Meta's up a little bit. Tesla's not moving. Usually when Nvidia moves, it moves with the broader market. Rocket Lab, though, has been a champ all day. 77.49. I mean, this thing was down 5% yesterday on the insider selling. Right back to normal. So although the very, very high beta space names are down 30, 40%, is why I continue to believe Rocket Lab will be the proxy. I mean, almost every space name, Firefly's down 5, Sidew's down 40, even ASTS is down more than Rocket Lab. It's not down a lot, but Rocket Lab's almost green. Which is also why I was so surprised yesterday when people said they're trimming. I mean, like, I get it. Evaluation is expensive, but you said every other post saying I'm taking profits here. I'm like, okay. But if this one really is the proxy, you hold on to that thing. Because, I mean, who knows how crazy that proxy could get to. It's only a $40 billion company in comparison to what could be a $2 trillion IPO. That thing could get really crazy going into next year. Bitcoin right there, 87.3. That's up as well. Up from 86.5. JP Morgan, new all-time high. Wow. Look at that. 325 on JP Morgan. She does not slow down. The bank. You know, the other bank I'm getting a little bit more interested in, and I know I'm so late on this anyway, is Citi. And I know Steve's been talking about this forever, but this thing is up 65% this year, dude. Banks don't move up that much. And Citi doesn't have JP Morgan's multiple. But if you look at the premium on their tangible book, I mean, everything that Citi has been doing has been just in the right direction after years of stagnation. So I feel like this once again becomes a play for 2026. It was a great play for 2025. If it even gets close to JP Morgan's multiple, we're talking about a $200 stock. So let's assume it's half of JP Morgan's multiple. You're still talking about like 160-ish, which is pretty good for a bank that's paying you a dividend. Yeah, Citi used to trade under 1x book. And now analysts are thinking it could have a chance to get up to 2x book, which would not be horrible. S&P back to 686. Okay. I guess S&P and NVIDIA are working together. They're colluding here to go higher. No one else is getting the message. NVIDIA trying to get to 186 as well. And everything else is not moving that crazy. Banks don't move like that. Society Generale, hold my beer. How much is that one up year to date? Oh yeah. We covered this like 2 months ago. Well, if you have a major narrative shift in your bank, you can also get a 188% move as well. I mean, even JP Morgan. JP Morgan's up what? Wait, let's look at the stock draft because I own JP Morgan. JP Morgan's up 35% this year, which is pretty freaking good. Okay, so Tanner has ServiceNow. We told Steve to fix the ServiceNow split updates. Let's see if he fixed it. If not, then Tanner is going to be off by a bit. Matt has to be number one with Rocket Lab. There's no way Matt is not number one at this point. Okay, where is this sheet? Let me pull this up. Stock draft. Where did this sheet go? Hold on. Let me pull it up. I don't know why it's not pulling up right here. S&P is still green. Where's Duolingo? That amazing, amazing company. Duolingo. 178. This thing was 200 a couple of days ago. No, I know it was last week. Yeah, it was last week. It was like 205. That one didn't last. That one didn't last. Okay, this is the stock draft. Yeah, Matt is well in the lead at this point. So our White House quant is up 38.5%. He's up 190 on Rock Lab, 105 on ASTS. I'm up 30. I'm now green on Visa. The only thing I'm down on is Duolingo, down 62. Steve is up 2%. Micron really saving a lot of his action. Unfortunately, just had a lot of names that ended up going red for the year. Tanner, did we adjust his ServiceNow thing? No. Okay, so we have to adjust the ServiceNow thing for Tanner. So it says he's down 84%, but he's not. So Tanner's doesn't count. And then Chris is up 7. Chris is down on Axon, Elf, and Oracle. He's down on Novo. He's up on Cisco, Lilly, Take-Two, Marvell, Google, and UNH. I'm up on AMD, Tesla, Hood, Palantir, JP Morgan, Nebius, Grab, Apple, Visa. Steve is down on Meta, Microsoft, HIMS, CrowdStrike, Netflix, Salesforce, and PayPal. And then Matt is only down on Dutch Bros, EOG, which is oil and gas, and then Oscar. He's almost break even on that. So, yeah, Rock Lab and ASTS really hammering Matt's portfolio right there and getting him in the lead. NVIDIA right there, 185.80. And S&P 686. GE Veranova wins a power grid contract to refurbish India's 1,000 megawatt HVDC link. Okay, so GEV, these guys continue to be extremely relevant across the entire world. They're down from a couple of weeks ago when they announced the $10 billion buyback and dividend increase. But definitely a very, very important company going into next year. We talked about Goldman Sachs's top picks for next year. There was another, let me pull this up, pick list by one of the banks. Goldman says Google is the only Max 7 they like for next year. Oh yeah, JP Morgan. Okay, so let me just read these out. So JP Morgan, these are the names that they like. Telecom, AT&T, consumer discretionary, Carvana and Starbucks, financial, Citi and Lending Club, and then software and internet, Palo Alto, Roku, and Salesforce. So those are some of the other names that the street's excited on as well. Where's VG? Where is VG? VG 667. All right, so that one also holding on to some of its momentum from yesterday. NVIDIA 185.75. All right, so now we got to hold the 185s on NVIDIA. I mean, a run to 190 would be incredible, but I don't know if we get that. Robin as well, reversing from 117 to 119. SoFi back above 27. So that 10 a.m. dip we saw, definitely people taking advantage of it. But NVIDIA holding on to 185. Okay, let's see some of the other stuff we have going on. Again, low volume on a day like today. Don't have a lot of crazy headlines. Tomorrow is going to be, the market's going to close at 1 p.m. So you got a lot of people that are probably signing off for the weekend as well. And for Christmas. Let's get an update right here on models as they continue to be trained in the LLM wars, and an update from Apple on how they're thinking about this as well. We'll be live tomorrow. We'll just not have a market close because the market's going to close early.
Has that story this morning. Hi, Steve.
Yeah, Mike, an interesting trend bubbling up in the AI model race this year. Look, we already know they were going back and forth, all these big models generating images or videos or helping coding or write. They all improved, but they all generally do the same thing. And this is kind of a race towards commoditization. We have plenty of examples of that happening already this year and going into next year. But let's use Apple and Microsoft as some case studies here, because neither of those big tech companies have a real frontier model of their own. So you see them partnering with others. Let's stick with Apple here for a second. After they failed to launch that new AI version of Siri back in the spring, they started hinting that they're going to partner with others instead. Tim Cook was actually asked about the commoditization of LLMs back in July on the company's earnings call, and he gave a little hint for saying commenting on that at all would give away Apple's new AI strategy. But later in the year when I met with him, he talked more specifically about partnering with other LLM makers. He told me, in addition to the current integration with ChatGPT, quote, our intention is to integrate with more people over time. Now over to Microsoft. They started hosting Anthropic models and investing up to $5 billion in the company. They announced that last month. They're also using Anthropic for some Copilot products. And now, look, they had that new OpenAI deal that was signed this fall, and that frees OpenAI to work with other cloud providers, while Microsoft now has the opportunity to go out and work with other models. I spoke with Judson Althoff. He's the commercial CEO over at Microsoft, and he told me last month that customers have actually been asking for more model options with Copilot. They don't want to be stuck on just OpenAI. He also said Microsoft originally invested in OpenAI to make it sort of an AI standard, and now Microsoft plans to do the same with Anthropic. So let's spin this all forward and look ahead to 2026. We're going to see some of this commoditization in action. That's no more prevalent than with Siri, which is going to be powered by that third-party LLM, maybe Google Gemini, maybe Anthropic, or maybe you get to kind of choose your own model. And then you can, on the Microsoft side, expect Copilot to adopt Anthropic, potentially some other LLMs, for more features within their primary tool. And that shows right now, this is kind of becoming the ultimate commodity. Well, users, they're not going to see what LLM they're using. They're going to be using Siri or Copilot or what have you. It's that product layer on top that matters the most, guys.
Steve, I was also taken by this quote by a Salesforce executive who said that they were a lot more confident in LLMs about a year ago, and sort of this shift away from Gen AI and more toward, I guess, what they call deterministic automation.
Yeah, that's right. And I think Salesforce is another great example, by the way, Carl, of the product layer on top of it. They've been struggling to get their agent force really sold, but the last earnings, we saw some signs that is going to grow. And look, if Salesforce is going to be a big one to do it next year, and we're going to see so many other companies follow through with that. But again, it's going to be choosing your own LLM. And I know there was a debate yesterday about what you're talking about between Jan LeCun and Elon Musk, and so many other people have this kind of debate what the next phase of AI technology looks like. That remains to be seen. But right now, it's the LLMs that are all kind of at parity with each other. You know, one week we have one that's the leader right now, it's Gemini 3, but you can bet next year we're going to hear about Anthropic. And
so here's the question, right? At this point, are the LLMs doomed to simply become a race to the bottom in terms of the cost per token, which Sam Altman has already talked about? Look at VG breaking 670 today. Nice to see that one up almost 2%. And the orchestration layer of the LLMs is where we actually get the value. That is a Salesforce, that is a Palantir, that is any company that actually makes sense of, and that is an Apple, theoretically, right? They're going to partner with an LLM company or all of the LLM companies, but the device use cases of the LLM are not really going to give value to ChatGPT. It's going to give value to Apple and their ecosystem. Like I would imagine that's the inevitable way this plays out. But then you also start thinking, what if the foundation model companies can monetize in a way that we're not thinking of? Or what if they're just so much more important than how we're conceptualizing the orchestration layer of the LLM, which allows them to, be a reasonable business that is sustainable? And I think something like Anthropic inside the enterprise, that one has like a real moat. ChatGPT, do they have a real moat? I mean, obviously the answer would be yes, but then if the switching cost is so simple, is the moat only first mover advantage? Because that's still a moat. It's just, is it the most exciting moat? And so, I don't know. LLMs are going to eat more and more of the stack. It's just obvious from a software perspective. Yes. And so that's the other argument that gets people excited about, or gets people scared about software, is that if LLMs start automating and doing what a CRM does, does OpenAI develop a moat by simply becoming the software layer to the enterprise, or replacing a lot of the traditional software layers? Now, this has been talked about for the past couple of years, that this would happen, like AI would eat SaaS. It hasn't really, you look at all the SaaS numbers, they're still all up in the right. They're not growing like crazy outside of Palantir, but they're all growing. And if anything, the LLMs have become an accelerant for their business models. But the day Gemini and OpenAI start saying, hey, we can do what Snowflake and Datadog and all these companies are doing, and we could just, bundle it with GCP, and they're already doing this to an extent. Like, is that where the software names get re-rated in a much worse way? And yes, obviously the agentic workflows would be where you start to see this. IGV, which is the software ETF year to date. Wow. Didn't even beat the S&P 500, 7%. The only freaking thing carrying this is probably Palantir, which I believe is the top 10 holding now in this. So if you bet on software this year over semis, you did not do well. If you bet on semis, you're up 47%. You're triple the S&P right here, or I think 2.5x the S&P. I'm in ServiceNow, a bit concerned about. Well, that's also why ServiceNow acquired a company today, right? I mean, there's probably a lot of reasons, but one of the reasons is they need to grow, and their inorganic growth is better to them than their organic growth in certain areas. I think they're compounding at 19% this year, or year over year. And Google at 313, Apple at 271. Introducing another company that can immediately add revenue to the top line. I mean, it's something they all have to pay attention to. So, I mean, there's not a lot of software companies that I think are super exciting to be in, outside of the ones that genuinely are growing in a meaningful capacity, just off the fear that they get commoditized. Perplexity Enterprise is also getting real traction, already taking a ton of market share. Perplexity has an enterprise business? I didn't know that. I feel like I should know that. Oh shit, they do. Dude, do people even talk about Perplexity anymore? I feel like no one really cares about Perplexity. Make research more efficient, free up time for your strategic work, and keep your team's data secure. Dude, if Perplexity Enterprise is growing, this market is so big. If Perplexity is able to get some of the market share, and they're supposed to be a consumer-facing LLM, and enterprise is where all the money is, right? I mean, Microsoft, Palantir, Google, Snowflake, Datadog, all these companies should still have massive, massive opportunities over the next at least 5 years to get momentum. NVIDIA 186. Okay, I guess she's the only one that showed up to the party today, folks. I guess she's the only one that showed up to the party. Look at that. 186 NVIDIA. Everything else is flat to red. Palantir's trying. I downloaded Comet from Perplexity, and I've never used it. Like, again, distribution matters. So Chrome is such a stranglehold on everything I do every day. It's just tough to change to a new one. Is Micron moving with it? Micron not at all-time highs anymore, but still a green day. 277 was at 281. Netflix 93.40. Wow, NVIDIA looking like she wants 190. 186.30. That's helping. I mean, that's the only thing helping the S&P. S&P is not getting. I mean, financials are helping the S&P today. Is Lilly up? Because then healthcare is probably helping. Lilly's not up, so it's financials and NVIDIA that are potentially carrying us back to all-time highs. Amazon. Well, Amazon was at this price in the morning, so I don't think it's necessarily made that big of a move here, but at least 231. Meta 62. Meta also same price it was in the morning. Now Google actually down from where it was in the morning. So yeah, those three names are green, which are helping. But in terms of really propelling movement forward, I think it's NVIDIA and the financials today that are getting some level. Glad I didn't buy FJet yesterday. Yeah, me too. Now, again, 4 years ago, I probably would have bought it because you'd be like, oh, dude, I remember, I think it was 2021. There was some biotech. I didn't end up buying it, but this thing went from 5 to 80. This is like when everything was going crazy. And I remember like wanting to buy it badly at like 75. I was like, oh, there's my dip from 80 to 75. And it's like you look back 5 years from then and you're like, man, I was really stupid. Like you just and that's what hopefully protects you from doing stupid things in the future. It's like, oh, stock goes from 5 to 80 in a day. And I remember wanting to buy the dip at 75. I didn't end up doing it. But I just remember like seeing people tweet about it and talk about it. I'm like, oh wow, it's at 75. That's my dip. It's like, no, that's not a dip. First of all, it shouldn't be from 5 to 80 for no reason anyway. I forgot the ticker. It's something with a G. It was a long time ago. And that's what makes you like be skeptical when you see shit that just isn't supposed to happen. A company that goes public on Thursday isn't supposed to go up 350%, especially if it's not a premier company like a Figma or anything like that. It's just a company that has space in its name. And then you start asking yourself, how does something like that even happen? Now it's down 50% on the day. How does something go up by hundreds of millions of dollars for pure speculation? And then that's when you realize, like, there's a lot of people that gamble in the markets. And they're willing to throw bets at stuff. Or there's a lot of people that genuinely have no idea what they're doing. And they think, buying something up 3x in a day is going to work out well. GMNR. Oh my gosh. That's hilarious. No, some shit with a G. I don't know what but it was some bio. I just explicitly remember being like, I need to get in on this dip. But again, very inexperienced, very stupid, just, navigating the markets with zero level of knowledge or humility. And then you actually realize what it means to invest in a company. Again, swing trades are different, but like if you're thinking of a legit investment, there's like, I don't know anyone who thought of FJet as a legit investment yesterday. And if they did, they're probably very inexperienced. You just, the price you pay does matter at the end of the day. And you can avoid a bad entry with time because time tends to heal all wounds. But it's got to be like, again, Microsoft peaked at the dot-com bubble, did not recover for 14 years. But if you bought Microsoft at the top of the dot-com bubble and held it till today, you would have doubled the S&P. So you'd have been dead money for 14 years, but you still would have doubled the S&P because those last, basically, what has it been, 8 years? Microsoft has outperformed so well. So entry price matters and time can heal the wound, but I don't know if time is going to heal the wound on Starfighter Space Incorporated. It's got to be a good company to be able to have time be on your side. Do you own ENS? I don't own ENS. We did an Equity Edge episode on this like a month ago, and Stock Talk owns this one. I was going to buy at 119. I thought it would come down to 115. I missed it, and then it just ran on me. So this is part of the energy infrastructure. He's buying it as a grid play. I do think it is a name that is worth a look. It's only a $5 billion company, and they are growing competitively against their peers. If you just search up the ticker symbol ENS on my X profile, you'll find the Twitter Spaces we did on it a month ago. And I do think it's a reasonable play for the energy sector. Yeah, 14 years of patience is not easy to do. It is kind of crazy, dude. When you look at some of those .com highs, it's kind of scary. Because just imagining it could happen again, like some of those names, when you look at their stats and what they did in 2000 and where they were trading at, and then how they fell when it all collapsed, and then how long it took for them to even have a hint of excitement in the markets again. It is kind of crazy. Now, again, different dynamics, GPUs versus dark fiber, raising rates versus lowering rates. I mean, you've got so many different components to now versus then. But the idea of a stock getting to that peak, having so many people buy in, and then not revisiting that peak for so long. I mean, it's just scary being on the side of the person who buys that peak. And those are, some of the names that I think a lot of people have to be careful of, especially the brand new IPOs. White House economic advisor Hasset, GDP figure, a great Christmas present for American people. Okay. I don't know if the American people are gonna. This is like, have you said thank you yet? Have you said thank you for the GDP Christmas present? Dude, the problem is the administration is trying to brag, and the average American doesn't really feel that they deserve to brag. Asset holders might feel they deserve to brag, but differences with this affordability narrative for the average American. Here's Hasset live right now.
Two things that I think the big macro trends that we're seeing in these numbers are, first of all, that President Trump's trade agenda is working. And so we got about 1.5% of the growth on 4.3 because we reduced the trade deficit. And then the other thing that I think, which is a big macro thing that we're seeing, is that the artificial intelligence productivity boom is really clearly in the data. And I guess you and I are old enough to remember back in the 90s when the computer came in, that all of a sudden you had like 4% quarters all the time, one after the other. And it kept surprising people because they thought, computers everywhere, but in the productivity data. But we're seeing it in the data, and we're seeing the same kind of regular surprises for market participants. And so we went back and we looked at every Bloomberg forecast for the main numbers since September and found that on average we outperformed the forecast 94% of the time. So if 94% of Wall Street economists are getting the macro trends wrong, they need to start to think about, hey, maybe Trump's policies are actually way better than we thought. And maybe the fake news that says all these terrible things, reconsider and grab their pencil and redo their economics.
It's a big step toward that thesis that productivity could raise potential in the years ahead, Kevin. It does have implications for employment, and that was something we talked about with Peter Navarro earlier this morning. Take a listen.
In an age of AI, where all the white-collar jobs are going away pretty damn quick, I think maybe it's a good time for people to think about having good blue-collar jobs.
Do we need to worry about white-collar jobs going away pretty damn quick?
Well, my good friend Peter, he I think is jumping ahead on that thesis a little bit more than I would. The bottom line is that the way to think about what we're seeing in the data for artificial intelligence is regardless what your job is, just about any job from blue collar.
You can tell Hasset did not want Peter Navarro to say that white collar jobs were just going away. You can tell he's like, oh boy, I got to clean this shit up now.
To white collar, AI is helping you be more productive at your job. And so there's a guy at Stanford, Eric Brynjolfsson, who's been studying case studies of how AI is affecting people. And he finds that the way to think about it is that people just have a great coach who's helping them be more productive regardless of what their job is. And so it is true that instead of seeing a job creation at the sort of 150,000 level, we're seeing it at the 60 or 70,000 level. It's a little lower than you would normally see at a boom time. But don't forget that this recovery is really taking off, and there's a heck of a lot of people coming off the sidelines and entering the labor force. And so I think that pretty much we're going to see the back in the 100, 150 range if we stay in the 4% GDP growth range as we head into the new year.
Yeah, because one thing that, Kevin, it's Leslie Picker, by the way, one thing that we are trying to square here every day is how the sentiment data stacks up against the hard data. And according to a CBS News YouGov poll, President Trump's approval rating on the economy was just 37%. A lot of people attribute that to the issue of affordability. And I'm just curious what you think needs to be done, whether it's from a messaging standpoint, a policy standpoint, or real change that will make Americans feel better about the affordability dynamic in this country.
Right. Well, one of the things about consumer sentiment, and so I'm not a political analyst, I'm just an economist, but way back in the day when I was senior economist at the Federal Reserve in the 90s, working with Alan Greenspan, we looked at all the sentiment indicators and found that they were pretty much uncorrelated with the hard numbers. And so when we thought about, well, why is it that people could be like really upset about the way the things are going, even though the numbers are good, or be not feeling so bad when the numbers are bad? And in the end, it turns out that I think it has a lot to do with news coverage and how people are processing, their glimpse of the outside world. The bottom line is, in the end, though, President Trump was elected because people saw the inflation. They saw that their real incomes dropped by $3,000 over the Biden term, and they said, we got to do better. And what's going to happen, I think, now is people are going to see real incomes growing all the way up to $1,300 this year already. And then, in the end, as they move forward politically, they'll look at their wallets and they'll vote. based on their wallets, not based on what the Michigan survey says.
Although Morgan Stanley's out today, real disposable personal income rose less than a tenth quarter on quarter at an annual rate. That's a kind of a slowdown from the first half, and it makes them worry a bit about consumption in the early part of the new year.
Well, I guess that these are the guys who have been wrong 94% of the time ever since Trump was elected. You know, I got to say we had like a blowout, Black Friday. We've got really, really strong third quarter.
He is right about that. The consumer has been strong. The analysts completely wrote off the consumer. The data is obvious that the consumer is held up. Now, maybe all that is on credit, buy now, pay later. But the point is, you're not seeing that completely collapse yet. And so you do have a lot of animosity from the academic elite that have a PhD in economics that have completely got the numbers wrong. But the pushback is the way that they're collecting the data is confusing. So, I mean, that could be one of the reasons why that narrative is being pointed in a different direction.
We've got CPI numbers into November, which is obviously in the fourth quarter, for those of you who are keeping track, at 1.6% core CPI. And so I think the prices are down, incomes are up, and that's why consumption is up so much. You know, one of the things that you have to remember is that when people are optimistic about their future, they're optimistic about next year, that it makes them more willing to spend a lot on Christmas this year because they're not worried that they're going to lose their job and so on. And so the optimism that it matters in the end is the thing is visible in the spending. And we had this blowout quarter, really two in a row of consumer spending. And the reason you see that is that people are very, very optimistic about their income growth and about next year.
So against that backdrop, should the Fed really be lowering interest rates? Obviously, you're a key contender for that chair job. If you have GDP the way it is, if you're looking at distributing checks, whether it's to service members or tariff rebates into the hands of Americans, is there really a case to be made to cut rates?
Right. Well, you saw that my old friend, all the way back to grad school, Austin Goolsbee, said that he made a mistake when he voted against cutting rates last time, and that he would vote to cut rates again, and that there's a lot more room to go. And the reason he said that was that the consumer price index numbers were so good. We don't have the other thing the Fed cares about, the PCE number, quite yet. But the other thing you can say is if you look at central banks around the world, the U.S. is way behind the curve in terms of lowering rates. And I think that when you have a supply shock like we did in the 90s, and like we're having now with AI, that it increases supply, it increases growth, but it puts downward pressure on inflation. What we saw under the Biden years, right, was that they were basically mailing checks to people and attacking supply. So we had lots of demand, reduced supply. That's where inflation comes from. We're doing the opposite. In fact, you know, we've reduced federal government employment this year by 250,000 workers. We've reduced the deficit so far this year. It looks like the estimates for this year, year over year, are going to be down by $600 billion. So we're reducing, you know, government aggregate demand, but increasing private sector supply, and that's why we're seeing growth and lower inflation.
Well, when you say the Biden administration was issuing checks and we're doing the opposite, does that not portend good things for checks in the first quarter, $2,000 or whatever the number might be?
Oh, well, that'll be something that'll be worked out with Congress. But the point is that if we're running a big reduction in the deficit, a big reduction in the trade deficit, recall that the trade.
I think that's him admitting that we're not getting $2,000 checks. He says that'll be something that is done with Congress. There's no way in hell Congress is approving printing $400 billion to give out to the man. So the fact that he even said that's a congressional issue, not an executive issue, and now he's shifting the subject to, hey, look at the tax rebates. I mean, I think that's him pretty much admitting either it's not going to happen, or if it does happen, it has to go through Congress, and it might not be the likely scenario that Congress approves it.
Imports from China were 22% of imports in 2017 when President Trump took office. It's all the way down to 9% now. So that means that we're not sending our money abroad. We're creating the jobs here. And so that's, you know, plenty of room for optimism about what's going on with supply.
I'm curious what details you can share with us about the housing affordability plans that President Trump and yourself have been teasing for 2026. What can we expect on that front?
Well, you know, President Trump has a lot of options on the table. There'll be a lot of discussions. As you can see, I'm at the White House today. We're doing the work of the American people every day right now. And we're, of course, going to unwrap our Christmas presents, but then we're getting right back to work. There'll be a lot of people working with the president next week to finalize a housing plan, which he'll sometime in the new year announce.
What are the options?
I'm not going to go through them all right now, because then he might say, oh, I don't like that one. And if everybody decides it was their favorite one, then it gets you into a weird news cycle. So I'm sorry.
One other curiosity this last couple of weeks, Kevin, has been the president kind of leaning into corporates. He called some insurance executives fat cats last week. Yesterday, kind of weighed in on whether or not defense companies should be issuing dividends at all relative to their production budgets. How much more aggressive do you expect him to get?
Well, I think President Trump is really putting the American people first. And he does that, sometimes with pressure and sometimes with action. I think that one of the things that he's concerned about in the defense sector is that there aren't a lot of firms producing weapons, and the weapons that they do produce cost lots and lots of money. We've had examples of submarines that, we buy and then they don't even deliver and so on. And so he's putting a lot of pressure on these companies that don't have a lot of competition and are charging a lot of money for, at times, things that don't even get delivered. But in the end, the president believes in free enterprise, and that's why he's so happy that there are so many groundbreakings right now for new factories. We've counted up to 35 now since September. And so when you hear him talking about the trillions of new investment, the trillions of new factory investment in the U.S., then we're actually monitoring it by groundbreakings now, but that increases competition. It also puts downward pressure on prices.
So for those free marketers or fans of capitalism out there who worry about a company maybe not going along with his pressure campaign on prices, they can resist it without fear of retribution?
I think that President Trump respects the Justice Department and the FTC's antitrust team. And apologies, there's a big loud truck going by right now. I'll speak a little louder. He'll adhere to the rule of law. But the companies that he's talking about are not the mainstream countries in the U.S.
All right, that was Hasset. NVIDIA, she touched it. 187, folks. Google now starting to participate a little bit more. Amazon down from 231, but that's still green. The S&P, again, I really think NVIDIA is doing most of the work here. Tesla's still red, 487, trying to get back to 490. Netflix is up. Lilly just came in. Rocket Lab basically flat. Iran is flat. Nebius is flat. Hood still down 2%. Palantir flat. I mean, it's NVIDIA. That's the story today. NVIDIA at 187. She touched 187. That is what she touched. For all those asking what she touched. NVIDIA's PEG, by the way, is still below 1. So the PE on NVIDIA is roughly 45. The growth rate's 50. To calculate the PEG ratio, you divide the PE by the growth rate. You're at 0.9. You're still below 1, which is generally the rule of thumb for a healthy PE. There's a lot of other companies out there where their PE is ridiculous, or sorry, their PEG ratio is ridiculous, and they're still getting a better premium than NVIDIA when NVIDIA is growing faster than them and pricing in even better expectations than some of those other companies. So again, this is not euphoric to see NVIDIA even make a run to 190. I think until you get above like 210, you're not talking about really aggressive multiples, but at least 200. I think we should be able to get there. Touching, pegging, goodness gracious, dude. We need to end the stream. That is it for today. Yeah, Micron's peg is ridiculous. Dude, look, the thing about Micron, again, this name their forward PE is 8, their peg is below 0.3. I just think the question has to become, do you think there's a super cycle for memory that still has more room to grow? Which, based on those earnings, it is really hard to act like there's not. But obviously it has had a very, very strong run going into the end of this year. NVIDIA right there just below 187 at 186.90. Okay, so yeah, I'll be on at the close. We'll have Jason. I will have my better laptop. I'll have a better mic as well. I'm going to get a lot more things set up. I thought I'd be good for this morning, but we'll get a bunch of things set up and make sure we're good for the close. I think that's pretty much it. Everything Hasset said was pretty much in line with what he's been saying over the past couple of weeks about the administration. Again, you're going to have to convince the American people that the economy is healthy and growing. And look, for asset holders, the economy has been great this year. Markets are up. I mean, probably going to end the year around 17, 18%. Can't be too upset about that. If not 20% if we get through 7,000. For other people, there's more questions than answers. But milk is down, egg is down, gas prices are down. These are the things I think they're going to have to really make a big deal out of, along with all those tariff rebates going into next year. Nvidia back over 187 to make sure the midterms are on their side. Okay, that is it for me. Give me a word of the day that means on time or early. Let's do that. Give me a word of the day that means on time or early. Dude, I'm telling you guys, every time I'm ready to go live, something in the last 2 minutes messes it up. Even today with the StreamYard crashing or this or that, the light bulb wasn't working. Like, there's always some shit. You think you're good. This is why I like being in my studio. Like, usually everything's okay, even though I still end up being late. Word of the day, punctual. Okay, we all know what punctual means. Give me a more advanced word that means the same thing. Let's see. Preemptive. No, that's not good. Give me a better one. Dude, if ChatGPT keeps not helping, we're going to go to Gemini. Anticipatory. No, we know this already. Let's go to Gemini. I want hard words. Give me all this basic shit. We know what punctual is, but do you know it? That's a good question. That's a good question. All right, let's see what Gemini does. Wow, dude, these are they all trained on the same GPUs? Punctual. All right, we're going to Grok. Stupid ass LLMs. Can't freaking. I haven't used Grok in so long, bro. I still pay for it. And I don't even use it. Okay, let's see. What does Grok give us? Yo, I think these LLMs are smoking something. Punctual. How do all three of them? You know what? We're going to do Perplexity. Screw it. We're going to go to Perplexity. If Perplexity does punctual, that's how you know they're all trained on the same freaking GB200. That is how you know. If this shit is punctual. Okay, this is just weird now. Now this is actually weird. Why do all of them give the same word? They all know you're not punctual. Okay, that's fine. But still, that's weird. There's only so many words for being on time. I thought it's a supercomputer. It should know every single word in the world and be able to figure out the similarities and the nuances of it. Okay, let me go to ChatGPT again. Give me another one, but make it a PhD level word. Do not be basic. Make it really complicated. Let's say the same thing. I'm live right now. People are waiting. Okay, let's see. See, there you go. That's better. Proleptic. Proleptic refers to anticipating or acting in advance of the proper expected time, often by treating a future event as if it has already occurred. It implies not just earliness, but temporal foresight and intellectual control over timing. His proleptic execution eliminated latency entirely. The outcome was decided before the deadline ever became relevant. Dude, I like that word. I like that word. Anticipating and acting in advance of the proper expected time by treating a future event as if it has already occurred. So basically, when I'm making jokes, I'm having proleptic execution because I already know you guys have laughed. I've already assumed that the joke has made you laugh, which is why the execution of the joke actually makes you laugh. That's a hell of a word, dude. I like this word. This is legit. This is like a word that makes you feel autonomous. It's a word that feels like it's empowering, gives you agency. If you want a one-liner flex for live audiences, this is it. I operate proleptically. Nah, I'm gonna start saying that. I'm gonna start saying that. Guys, I'm a proleptic type of dude. I'm gonna start saying it. That's a hell of a word. For all the people putting L's in the chat, you're forgetting the O and the L after the L. So just please make sure you correct your comments and have the O and the L with the L. The Reddit and Zeta deep dive will be out tonight, so that'll be out later today, and we'll be back for Technical Tuesday. And I think that should be it. Nvidia, wow, Nvidia. She really going for 190 here? We'll see at the market close. 187.40. She's by herself. No one else is moving with her. But there she is. All right, that is it. Custard says we laugh with embarrassment for you, Amit. The point is you're laughing. Like, that's what matters. Even if you're laughing at me, you are getting a chuckle. You're forgetting that word. And I honestly don't think I'm going to forget this word. I forget every word of the day. Like, I can't even tell you what yesterday's word of the day was. Proleptic, I legit think I'm going to use for a long time. Proleptic. Okay, there you go. That's my word. I'm using it. That's it. I'll be back in about 3 hours. We'll have Jason on, do TT. And yeah, that should be it for the day. And then we'll have those two deep dives out later in the day as well. All right. Thank you, everybody. Appreciate it. Have a proleptic day in which you take action because you already know the effect of that action has already happened. AKA have a day of confidence and strength, even though I can't say strength properly. And I'll see you guys in the market close. Bye, everybody. Have a good one.